A very warm good morning to all the participants of this GST certification course hosted by Hiragange Academy. We warmly welcome you for the 9th day of the session. On 9th day, we are going to deal with the topics of demands, recovery, appeals, assessment, departmental audits, and how to deal with audits. We have broken this topic into two sessions. The first session covers only demand, recovery, and appeals, which would be taken up by CA Ashok Batra sir. About the speaker, CA Ashok Batra sir has an experience in the as a practicing chartered accountant for almost 4 decades. He became qualified chartered accountant in the year 1981. He became a law graduate in the year 2009. Presently, he is a senior partner in Messrs. A.K. Batra and Associates, chartered accountancy firm, which was established in the year 1982. He has excellent academic credentials and vast exposure in the field of taxation with specialization in service tax and GST. He possesses rich and varied experience of more than 38 years in the business and taxation consultancy. His deep desire to share his meticulously built pool of knowledge with others has inspired him to write articles and books for the professionals such as chartered accountants and advocates. He has written so far 4 books in GST regime regarding GST audit, ready reckoner, acts, rules and forms with references, and procedural book. Further, in addition, he has also written a book on Sabka Vishwas Legacy Dispute Scheme 2019. He has addressed many seminars and conferences organized by professional bodies, institutes, Chamber of Commerce, Trade Association, NASIN at several places in India. He has also delivered numerous talks on indirect taxes at various forums. He has also been a faculty of certificate course on indirect taxes of ICAI at all leading centers spread across the length and breadth of the country. Furthermore, he is invited to deliver union budget talk in respect of GST by many study circles, branches, and regional councils of ICAI, as well as by leading chambers of commerce and industry and media channels. He has also had privilege of being a special invitee to Indirect Taxes Committee of ICAI. With this brief introduction, I warmly welcome CA Ashok sir for this taking up this session. Welcome, sir. Kindly take the session forward.
Good morning to all the attendees.
Good morning.
First of all, my thanks to Hiragange Academy for providing with this opportunity, wherein I can share my views on this very interesting topic of demand, recovery, and appeals. Friends, let me congratulate Hiragange Academy for choosing such wonderful topics. Otherwise, I have seen in most of the webinar, people are choosing topics which are relating to compliances only. So, without wasting any time and looking to the time constraint, this is the agenda which has been given to me by the Academy: demand and recovery, pay notice consultation, common error in replies, appeal, recovery proceedings, and practical issues with possible solutions. So we will take these topics one by one. First of all, if we come to demand, the question comes how the demand can be created. If we look at the scheme of the GST law, then there are section 59 to 64 which deal with assessment. Once section 59 deal with the self-assessment, if I am self-assessing myself, then I am creating a demand. This is the amount which has become payable according to my own assessment, which I am liable to pay. Then there are provisions with regard to provisional assessment, scrutiny of returns, assessment of non-filer of returns. In all these cases, the procedure of issuance of show cause notice to be seen, then assessment of unregistered person, and summary assessment in certain special cases. My topic is not assessment, so I'm not touching it. I'm just giving you overview of this section wherein the assessment can be framed either by the supplier or by the department, and then demand can be created. In the case of provisional assessment, I may approach the authorities. I may say this is the supplies, what is the tax. They may assess my tax and they will ask me to deposit that kind of a GST which I deposit. And final assessment, if the initial amount paid on provisional assessment is less, then I am supposed to pay more. Then friends, another area where the demand can be created is audit, and we all understand there are three kind of audits. One by the chartered accountants, and if the chartered accountant says that this is the likely demand which we are liable to pay as per the provisions of law, then the client may accept it. If the client doesn't accept it, we have to report it 9C. Then there is a audit by tax authorities. This is always there. Then there is a special audit provision where the accounts are quite complicated and the department feels they are not in a position to do justice to the job, and they intend to engage specialized professions like chartered accountant and cost audit. Then there can be special audit. Besides audit, there can be an inspection, search and seizure. Audit can be done only of the registered person. But if I am liable to pay the tax and I am not registered with the department, certainly there is no question of audit being done either by the chartered accountant or by the department. So in all those cases, the department can take the refuge of these two sections, which is power of inspection, search and seizure, and while moving the goods, if the goods are not being having proper documentation, then they can invoke this section also. Then friends, in all these scenarios which we have discussed where there can be a demand, there can be other situations also, but this is what I could visualize, so I am sharing with you. Now it is a settled proposition of law if there is a short payment of tax, non-payment of tax, erroneous claim of refund, or wrong availment or utilization of the credit, then department can serve me a notice under section 73 or 74. 73 is invocable when all the four situations which we have discussed is not because of fraud, willful misstatement or suppression of it. If it is with regard to allegation of fraud, willful misstatement or suppression of fact, then they can invoke section 74. In both the sections, there is a difference in the amount of penalty, and secondly, the period for which the GST can be demanded. In section 73, there is a normal period demand which can be created, which is 3 years from the relevant date, whereas 74 is 5 years from the relevant date. Then there is another section 76, which says if you have collected any amount as a tax, whether that amount was leviable or not leviable, then that money is lying in trust with you. You have to deposit with the government. Failure to do so, the department can serve you notice under section 76. 77, we all know, wherever we wrongly classify any transaction interstate as intrastate or intrastate as interstate, then we have to pay tax to the right government, and that also creates a demand that we have to pay tax to the right government, and we can claim refund paid to the wrong government. With this background, now we'll move to the recovery, demand and recovery sections and the important issues involved therein. First of all, normally, how much if I am being served with an order, in any case, once the show cause notice is being issued, that notice will be adjudicated. And even if there is a special assessment, there has to be order. So this section use the word order, not adjudication or assessment order. This section clearly says any amount payable. What is amount payable? We will discuss subsequently. By a taxable person. Here the word is taxable person, not the registered person, because I may be liable to pay the tax, but I don't get myself registered. I'm not complying with the provisions of law, so the amount can be recovered from me also. So here, unlike audit section where there is a registered person being used, similarly in the case of tax credit also, the registered person is entitled to claim the credit. This section use the terminology taxable person. So any taxable person in pursuance of an order. Now this term order is very wide. It includes both assessment order, adjudication order, or any other order. Then if there is any demand, I am supposed to make payment of that demand within 3 months from the date of service of such order. There is a difference between issuance of order and service of order. This language is absolutely clear, and in the past there have been number of judgments wherein the language used was from the date of the order. Even then court held date of order means the date when it is being served to the assessee, unless otherwise it is not being served, you cannot say the order is being passed. You cannot pass an order to keep in your file. So in order to enforce the demand, you have to serve that order, and within 3 months from the date of such order, I am supposed to make the payment without interest. This is the period which has been allowed to me to make the payment, so I can do that. But then the government has also given a power by way of a provision to the proper officer to reduce that 3 months. But he cannot simply say you are liable to make the payment within 30 days or less than 3 months, maybe 20 days or maybe 40 days. He has to satisfy two very important parameters before he can tell me that you're liable to pay tax less than 3 months, which has been provided under the provision of this section. And that is, he feels that it is expedient in the interest of revenue. This term absolutely is very clear, doesn't require any comment, and for reasons to be recorded in writing. So he has to record the reason in writing. If this is the reason, and in case this particular supplier or assessee is being given a time up to 3 months, there is a likelihood that he may run away from the scenario or something has happened. So it is in the test of revenue that he will be permitted less than 3 months. So he can do so only when he comply these two conditions. He records the reason in writing and proves that it is in the interest of revenue, friends. Then, friends, we are coming to the very important section of recovery, that is section 79. We have understood there has to be a notice, there has to be order, and then the recovery procedure will start in case I fail to make the payment within 3 months or the reduced period wherever the proper officer has instructed me to do so. Now, friends, recovery of tax, very, very important section. Subsection 1 says where any amount payable. What is the amount payable? This is an issue which has been debated in the courts even today, because the government is trying to attach the bank account of the suppliers without making proper demand, without making proper assessments, simply on the basis of certain investigation. So the language is very clear, where any amount payable by a person to the government and that amount has become payable and I am not paying it, then only you can recover it, and then the modes have been specified in this section. Now, friends, there have been number of cases in the erstwhile law wherein they say amount payable means when it is not subject matter of dispute, and where it is subject matter of dispute, the assessee has not preferred the appeal and the time limit for filing the appeal has already gone. Because in case I decided to go for the appeal, then I am being given an option to pay 10% of the disputed amount as tax plus 100% of the admitted tax. Will come to those provisions if the time permits. And I, by rest of the demand is being stayed. Kindly listen to me very carefully. Let us say my demand is 1 crore. I want to agitate it and it is before the commissioner appeal, then I have to deposit only 10% of the tax amount, let us say 10 lakh. Then 90 lakh demand stands state. If that being so, you are asking me to pay 1 crore without being assessed. So you are depriving me the benefit of those sections also. So I will not go to those judgments which were there in erstwhile law. Very recently, rather on 21st of April, only a couple of days down the line, there was a judgment of Jharkhand High Court in writ petition number 3517. And in that judgment, this Jharkhand High Court has made very important observations. We all understand that the demand of interest is automatic. But once that demand is being disputed, even in that case, the High Court has said you have to serve him the notice before you start the proceeding under Section 79. I will read certain important observation made by the court in the para 22 of that said judgment. Garnishee proceeding, which you all understand, when the amount is due from some any person, the department attach that amount and try to recover it, which will come and discuss in detail when we go to the other clauses of Section 79. So what is really important to understand is Garnishee proceeding under Section 79, which we are discussing, can be initiated for recovery of interest without adjudicating the liability of interest when the same is admittedly disputed by the assessee. Section 79 empowers the authorities to initiate garnishment proceedings for recovery of tax where any amount payable by a person to the government under the provisions of the Act and rules made thereunder is not paid. Since in the preceding paragraph of our judgment we have already held that though the liability of interest is automatic. Now it is very important to understand. The court says liability of interest is automatic, but still the same is required to be adjudicated in the event an assessee disputes the computation or very leviability of interest. I say this interest is not leviable or the computation is not correct. In that case, it has to be adjudicated by initiation of adjudication proceeding under section 73 or 74, which we have already mentioned. I've already mentioned and we have already discussed in the preceding lectures also. So till such adjudication is completed by the proper officer, the amount of interest cannot be termed as an amount payable under the Act. So the whole issue is the whole recovery procedure, which we are going to discuss in these ensuing sections, which will be from 80 to 84, shall apply only when there is the amount payable, and amount payable means there is a proper order, and proper order means the period of 3 months in which I can make the payment has also been lapsed, or the reduced period as we have already discussed. Now friends, these are various mechanisms through which the recovery can be made. I will not spend much time on this. I'll just mention the headings of it because the topic which has been assigned to me is too huge. So in order to do justice to the topic, we will just pass through these various modes. He can ask the proper officer to deduct the amount where there is any amount pending under the control of the proper officer. He can detain or sell any goods which are under the control of the proper officer or any other specified officer. He may serve notice to any other person from whom the money is due or may become. This is very important. He can serve me a notice to any other person from which money is due or any or may become due. I just want to clarify here. Let us say I am a landlord. I have given my premises on rent to somebody else. He is liable to pay the interest. There is a demand created against me. He can write to my tenant, if this amount is becoming due or it will become due, you are liable to pay to the government and not to that gentleman, your landowner. That officer can do so. But he cannot demand more than the amount which is due. Suppose in terms of the rent agreement, I am supposed to pay rent by the end of the month. So he can only demand that kind of rent which has become due on a particular date. For next month, he cannot ask me to pay amount in advance to him. As my liability towards the landlord will accrue month to month basis, he can ask me to pay that amount to the government and not to the landowner. And if the demand is less than the amount which is due from us, so he can only give me an instruction to pay the amount to the extent that amount is payable by my landowner. Friends, then every person to whom such notice is being issued, he is bound to comply with the notice, particularly even post office, banking company, insurer also. And if it is not being done, the consequences are serious. That gentleman will be deemed to be in default, which is there in C3. Person to whom notice is issued failed to pay shall be treated as defaulter. This is what I was telling you. Proper officer may amend, revoke, or extend the time for making payment depending upon the situation. If he is able to recover it from somebody else and the demand has been reduced, or he can extend the time also looking to the fact the amount has not become due. So this power is being given to him. Then comes deemed to constitute. Once tenant pay the rent to the government on behalf of landlord, then it will be considered as the landlord has discharged the liability to the extent the payment has been made by the tenant. For example, the amount due was 10 lakh rupees, my monthly rental is 2 lakh rupees, I am paying 2 lakh rupees per month to the government. So it will be presumed that deemed defaulter has paid the amount of 2 lakh rupees per month, and accordingly interest liability will also get reduced. It is important to note. Then comes in case non-compliance of the notice making payment of the person in default. will make such person personally liable. So in case you don't comply with that provision, again serious consequences. Person to whom notice is issued proves no amount is due to the person in default, no recovery to be made. This is what I was saying when I was giving you an example. If my rent becomes due by the end of the month, and if the end of the month is not there, he cannot pressurize me to make any payment, and whatever amount will become due by the end of the month, each month, to that extent only he can ask me. If I have taken certain material from him, let us say it's a case where the defaulter is a trader and I have been given a credit of 45 days, then no demand can be made from me till 45 days. Once the amount has become due, then only this recovery can be done. It's again big power. Prime Minister, proper officer may distrain or sell property of defaulter and refund the surplus if any. If proper officer is having access to any of the property, he can sell it, and after selling, if the proceeds are more than the amount, then he can appropriate the amount to the extent of demand, and rest of the amount has to be paid to the person whose property is being disposed of. Proper officer may prepare a certificate, send it to the collector or authorized officer who shall proceed to recover it as if it's a year of land revenue. This is normally the clause in every fiscal statute. You look at income tax, service tax, VAT, etc. This power is being given that this amount can be collected as if it is a area of land revenue, wherein the government gets a priority, it's the first charge, etc. And he can file an application to the magistrate also to recover the amount if it is a fine imposed, and that amount shall be recovered as if it is a fine imposed by the magistrate. So these are huge powers given to the department to make recovery, and all this till F clause, these are mechanism how this recovery can be made. Now we are coming to subsection 2 of section 79. This section prescribes that any amount due under bond may be recovered as specified in 79(1). We have read A to F, all means of recovery. So they say once you have executed a bond, for example, I take a very simple example, zero rated tax. Once it is a case of export, you can make the export with LUT or bond. Right now, bond is not under execution, only LUT is to be filed, or with payment of tax. So once any LUT is filed or any bond is being filed, for example, in section 129 also, we can release my goods on execution of a bond, etc. So wherever I execute a bond and I don't fulfill the conditions of that bond, and that amount become payable to the department, then department can recover such amount which has been specified in bond in any of the manner which we have already discussed in section 79(1). Then friends, subsection 3 says that state tax officer can also recover the amount. For example, I am registered with the state authority. There is a demand of 1 lakh rupees each in state law and central law. State officer can also recover the amount which is due to the central government and then send it to the central government. This power is there. Similarly, correspondingly, any person who is under the jurisdiction of the central authorities, he can also recover it as it is an area of central tax and send it to the government. Then friends, it says, if the amount recovered by the state authorities is less than the amount which is due from the defaulter. Let us say there is a defaulter trader who is liable to pay 5 lakh rupees to the government, and the state officer is able to recover 3 lakh rupees, and there is a demand of assuming 2.5 lakh each under state and central law, then that 3 lakh rupees will also be distributed between center and state in the same proportion in which the demand is there. In our case, it is 50-50%. So 1.5 lakh will be appropriated to the account of state government, and 1.5 lakh will be appropriated to the account of the central government. Now comes section 80. If I am not able to make the payment of GST, I can request to the commissioner for making installment. Now, this is an important section, so I would like to deal with this section for 5-10 minutes. So kindly appreciate how this section will come into picture. It says an application filed by a taxable person. So that means not registered person, I have mentioned within bracket because most of the time it is registered person wherein some facilities have been given like tax credit, etc., which I have told you. But because the demand can be in the hands of a taxable person is defined in CGST section 2. Anyone who is registered or liable to be registered, then commissioner may. The word is not shall, the word is may. It is a discretionary power given to the commissioner, and that too for reasons to be recorded in writing. If the commissioner is convinced, I make an application, application has to be filed by a taxable person. I am a taxable person, I have to make an application. Considering the content of the application, the commissioner may, for reasons to be recorded in writing, extend the time for payment or allow payment of any amount due under this act, other than the amount due as per liability, self-assessed in any return. So installment is not permissible for the amount which I have self-assessed under section 59. When we started our deliberation, I started with section 59, which is self-assessment. I said the demand can be created. So the only issue which we now need to remember is that once I have admitted my liability, it is self-assessed. Then for that amount, commissioner has no power to grant me any installment. Barring that, if there is any demand because of any litigation proceeding, recovery, investigation, audit, or whatever, then he can grant me a facility to pay the amount in installment, and those installments cannot exceed 24 in numbers. That means he can ask me to pay within 24 installments. And believe me, this is monthly installment. You cannot say you grant me 24 installment on quarterly basis or half yearly basis or yearly basis, and I can postpone the demand for 24 years. No. And this is the maximum period. If the commissioner is not satisfied, he can grant me only 4 installments, 6 installment, or 10 installment, as the case may be. But what is really important to understand is that is monthly installments. It cannot be quarterly. Similarly, it cannot be fortnightly, weekly. He can grant me monthly installment, which can range from 2 to 24 and subject to payment of interest. So the granting of installment does not mean that interest is not leviable. I'll give you an example to explain this. Let us say there is a 10 lakh rupees which has become due to the government by a trader defaulter. He says you can make me payment of 2 lakh rupees for 5 months. If I make payment by 7th of the following month and I religiously make such payment, that doesn't mean I'm not liable to pay interest under section 50. In addition to that 10 lakh which I have paid, I'm also liable to pay interest to be calculated under section 50. If surplus 1, 18%, if surplus 3, then 24%. So those grant of installment does not give immunity from the payment of interest. You cannot take a plea before the department that once you have permitted me to make the payment in 4 installment, which I have done it, or 5 installment, which I have done it, so I'm not liable to pay the interest. It is not so. So it is being made absolutely clear. And this is, in fact, a very normal practice under any fiscal statute. Then this is again a very standard proposition. Default in one installment, whole amount shall become payable. Once I am defaulting in one installment, for example, that defaulted trader who was supposed to make payment by 7th of the following month, and let us say the month starts from April, he makes first installment 7th April, second on 6th of May, but third third installment he fails to make the payment, then rest of the 6 lakh will become due to the department, and that can be recovered without serving any other notice. He can attach your bank account. He can take a coercive method, which we have already discussed in section 79(1). If there is something in the control of the proper officer or specified officer, that amount or that stock can be appropriated. So all those mechanism available under section 79(1) shall become applicable if I make default in one installment. And I'm once again repeating for the sake of repetition that interest will be calculated in terms of section 50, and there is no immunity from the payment of interest, whether I am defaulting in installment or whether I am making all the payment as per the installments sanctioned by the commissioner. Then friends, this is very, very important section, section 81, and most of the people are now worried wherever there is a cases of fake invoices, etc., and the demands runs into hundreds of crores or crores. So they are looking at it, whatever properties are there, then they should try to dispose it off so that tomorrow, if the department is not able to recover, they may have to write it off. Kindly appreciate one very golden principle of GST. Anyone who was at the helm of the affair, maybe he was the director of the company, maybe he was a partner in partnership firm, maybe including LLP, or he was a proprietor. During the period for which there is a demand, nobody can transfer this responsibility to anyone. Even if he retires from the directorship, even if he retires from the partnership firm, for the demand which is already there. In the case of partnership, he has not only to sign the retirement of the dissolution deed, but he has to intimate to the department also to get rid of the future liability. But one thing which is very clear, I am once again emphasizing on it, kindly make a note of it, that if Mr. Batra is a director of a company and during that period certain purchases are there which has been doubted by the department and ultimately Mr. Batra is not able to prove the case, then the amount is recoverable from Mr. Batra. Maybe on the very next day he has resigned from the directorship and he has nothing to do with that company, he has sold his shareholding also. Mr. Batra will continue to be liable for the demand for the transaction which has happened when he was the director, unless otherwise he is able to prove it is without his consent and he has taken all preventive shares, which is the normal clause. So now, friends, coming to this, whenever there is a likelihood of demand which can be enforced against me, so most of the people try to transfer the property, try to transfer his own financial interest either to their family members or to the third party even, and then the third party, then they're getting the amount which they normally gift it to somebody else or maybe utilize it through other channels. So now this is very, very important section. But again, the language, if we look at 79, he was, that section was using the terminology amount payable. Here it says where a person after any amount has become due. First of all, one need to appreciate the term used is a person, not a registered person, not a taxable person. Because if Mr. Batra is the director of the company, he is neither a taxable person, company can be the taxable person. He is not the registered person, company can be a registered person. So therefore, the department has very wisely chosen the term a person where the amount has become due from. So amount payable, we have referred to Jharkhand High Court. I have not given any cases from the rest-while law. And similarly, amount due has been defined in the rest-while cases also. And even Jharkhand is very clear now that the amount will become due only when the assessment is being finalized. Once that is being done, then only a charge, then only if I make a transfer. Now the question comes, if I have done a default in 2019, right? Let us say April 19, and then I transfer the property in 20, whereas the demand against that transaction was finalized in 2021, whether that transfer will be treated as void. In my humble opinion, yes, because it says where a person after any amount has become due. And in fact, it's a very long process before they can come to your properties, because even if some demand is being created, I can always go in appeal, pay 10% or 20% as the case may be, and rest of the demand is stayed automatically. So till that appeal is being decided, I don't think anybody can challenge. So Section 81, if you want to make use of it, there is a fear, there is a demand. Then in case any transaction has been done before any amount has become due, according to my understanding, those transactions shall not be covered under the provision of this section. Although the language used is very, very dicey. I just read it where a person, after any amount has become due from him, create a charge on or part with the property belonging to him, understandable, or in his possession. How can a property which is in my possession, his transfer can be void? I may be having the possession of that property in fiduciary capacity. According to my understanding, the language in his possession is very faulty and it will create a lot of problem when they will be debated in the court. So nobody can attach a property which is in my possession because of some fiduciary capacity or any other capacity. If I am not the owner, if I don't have any beneficial interest in that. But this language, this section use this language by way of sale. Then they say that property should not be transferred by way of sale, mortgage, exchange, or any other mode of transfer. They have make it very, very exhaustive whatsoever in favor of any other person. Again, the word is any other person, not related person, not distinct person. So even third party, with the intention of defrauding the government revenue, such charge or transfer shall be void against any claim in respect of any tax or any other sum payable. It may be tax demand, interest, penalty, or any other sum due under the act. So after reading this, I just want to make 2-3 observations which one need to understand it. One is this section can come into picture only when the amount has become due. Number two, any person is being covered. He may be registered, he may not be registered, he is taxable, he may not be taxable, whatever. Any amount payable, the transfer of property can be void. In my humble opinion, the language in his possession is not in the right perspective. It has you should have a beneficial interest in that property. So I have mentioned in the last 3 points also, which is there on the screen, shall apply when any amount has become due, property belonging to or in his possession, which is really dangerous one with the intention of deferral. Now there has been an exception which is being created, and that exception is the transfer, even if is being made after the amount has become due, shall not be void if it is being made for adequate consideration in good faith and without notice of pendency of such proceeding. So it is very difficult to prove. If I am facing the investigation and all that, I am not sure about that. The demand has been crystallized. Very difficult to prove. But yes, it provides an exception in favor of the person who has purchased that property in good faith and without realizing that this amount is there. But if you look at the language, whether this exception can be invoked practically in any of the situation, kindly see it says adequate consideration in good faith and without notice of the pendency of such proceeding under this act, or without notice of such tax or other sum payable by the said person, or with the previous permission of the proper officer. Whether any proper officer will give you the permission. Anyway, this exception is there and it is only to protect the bona fide buyer of that property. How the court will interpret, look into the language of this section, the time to come, it will be there, because right now, because most of the time the demand is not being assessed. If it is not being assessed, so this section cannot be invoked as on today at least. Then section 82, it says that whatever is amount due. Now what is really important is it is a non-obstant clause, but non-obstant clause is normally with reference to one particular section. If you refer to section 16.2, it says notwithstanding anything contained in this section. If you go to section 8, then says notwithstanding anything contained in this act. This non-obstant clause is not anything contained in any law for the time being in force. किसी भी लॉ में कुछ भी लिखा हो except, and what is that exception? Insolvency and bankruptcy code. उसको छोड़ के अगर उसके प्रोविजन में कहीं प्रायोरिटी है, कॉन्फ्लिक्ट है, तो उसके प्रोविजन प्रिवेल करेंगे. बारिंग दैट, इन ऑल सिचुएशन this section will prevail over any other law in force, and the amount due to the government under this act shall be the first charge on the property of such taxable person or such person. So they have covered both taxable person and such person. There cannot be any other third person besides these two one. Either I am liable to pay the tax and then I am liable to get myself registered, or such other person. Such person means any other person, or such person. I just repeated once again, not sending anything under the any amount payable by a taxable person or any other person on account of tax. So any other person is being referred as such person. So that means any person is being covered under this section. Now friends, we come to section 83, which talk about provisional attachment to protect the interest of revenue. This is the most dangerous section. Now kindly look at the wide powers which has been given to the department under this provision. During the pendency of any proceeding under section 62, we have seen it 59 to 64, these are all assessments, or 63 assessment special case, 64, or section 67 which is such, we have already discussed that also, 73 or 74, wherever you want to recover any demand, you have to submit show cause notice. So he says during the pendency of any proceeding. 79 was talking about any amount payable. 81 was saying any amount due. Now it says nothing due, no payable. During the pendency of any proceeding, if any proceeding is pending under section 62, 63, 64, 67, 73, 74, I've already mentioned in first slide, I mentioned 59 to 64, which are different kind of assessment. Then 67 we have mentioned in audit wali slide that it is all such inspection, such etc. If any proceeding is pending and commissioner is of the opinion that for the purpose of protecting the interest of revenue, he may by order in writing provisionally attach that property. This is the most dangerous section, including bank account belonging to the taxable person. So he can attach any property, he can attach my bank account even if the demand is not being finalized and during the pendency of the proceeding. Under this section only, the department is attaching the bank account and people are going to the high court saying the amount payable is there, then only recovery proceeding can be there. And even this provisional attachment cannot be done unless otherwise there are very exceptional cases wherein the department is able to prove that if these properties are not being properly provisionally attached, there is a likelihood of loss to the department. So friends, this is very important, but subsection 2 provides some relief to the suppliers or the assessees under the act, which says this provisional attachment will automatically expire after the period of 1 year. Very recently, we had seen one case in Delhi High Court. I don't remember the name of the case right now. So in that case, the assessee approached the bank account that they have wrongly attached my bank account provisionally, and the High Court came very heavily on the department. But unfortunately, in that scenario, 1 year was already over. So the High Court itself said that once there is a limit of 1 year and that is over, so now that provisional attachment is being lifted. So the High Court lifted that attachment. It's a Delhi High Court judgment, which you can refer to if required. Now this is section 84. This is the last section in connection with the recovery proceeding. It says if any amount is due under the act and you are under the procedure of appeal, etc., and the demand is being reduced or enhanced, then what will happen? So when the demand is being enhanced, so he can recover that amount and submit the notice of demand for the differential amount. Let us say the initial demand was 1 lakh. It got enhanced to 1.5 lakh. He can serve me notice for 50,000 rupees and then he can recover the demand. and the proceeding of 1 lakh rupees, that will continue to be there without service of any fresh notice. Where the government dues are reduced, this is the second situation. Then it says not necessary for the commissioner to serve upon the taxable with a fresh notice. 1 lakh rupee ki demand thi, now it has reduced to let us say 50,000. That notice is already there. There is no need for fresh notice of demand. Intimation of such reduction must be intimated to him, and then proceeding may be continued at the stage at which they were there. For example, if 50,000 demand remains, the department can recover me whatever procedure they have already followed, that will be continued, but not with the intent to recover 1 lakh, but with the intention to recover only 50,000 rupees. Now, friends, after this recovery, I don't know, question answer session we will take at the end, I suppose. So I am moving to second topic which has been given to me, and this topic is slightly unorthodox, unconventional, or very important. How this pre-notice consultation concept came into picture, and what is pre-notice consultation? Notice when we are referring to notice, it is show cause notice. So pre-notice consultation meaning is communication of the grounds on which he intend to serve me show cause notice. He can call me and ask me these are the grounds on which I want to serve you the notice. I may say I agree to this two particular issues. I want to deposit the amount. So I deposit that amount on those two issues. So there is no need to serve me show cause notice on these two particular grounds or on all the grounds, or I may not agree with the department. I say you can serve me the show cause notice. I don't agree with you at all. This whole concept was initiated, according to my understanding, in 2005 when the notice was issued, which was on 21st of December, wherein it has been made mandatory to do the pre-notice consultation with the client. Then thereafter, on 10th March 2017, again before the implementation of GST, the department issued another circular. Board made a pre-show cause notice consultation mandatory, and in one of the case where it was not being issued, the assessee went to the Delhi High Court. I'll come in the next slide. You'll find out the case, and the notice was vacated on that limited ground that there is no pre-notice consultation as mandated in the circular, which is binding on the revenue. So this is very interesting. Again, they are referring to the notice dated 21st December, which we have seen in the previous slide. So there was a reiteration on 10th March 2017. It's a very important step towards trade facilitation, and you must do that. And thereafter, on 2nd April, under Custom Act, not Service Tax, under Custom Act, they came out with the detailed regulations with regard to pre-consultation. So we'll go through that, hurriedly go through only to the slides, but we will not deliberate on that in detail because that has got no issue that is applicable to Custom Act and has nothing to do with the GST. But yes, I'm trying to tell you how this concept evolved and what is being done in GST that we will unleash and discuss in the slides to come. So in Custom Act on 2nd April, they created one pre-notice consultation regulation 2018, detailed regulations. And in master circular, they made it mandatory that all the adjudicating authorities of all indirect taxes should follow it. Therefore, on 8th May 2019, taking this clue that it is applicable to all, a show cause notice being challenged in Delhi High Court, and Delhi High Court annulled the service tax proceeding, and the name of the case law was Amadeus India Private Limited versus Principal Commissioner, Central Excise Service Tax and Central Tax Administration. Reported at 2019 5 TMI 669, order is dated 8th May. Very important judgment which clearly says that once you have issued a circular where you have made it mandatory, that is binding on the court, they should have done it. And on that limited basis, the demand was annulled. Then these are the custom notification wherein the pre-notice consultation regulation 2018 was listed, and all these regulation contain number of rules. I will not read them. I have just given it for your reference under Custom Act, because the custom law is still continued. It is custom duty has not been subsumed. So anyone who is interested in custom can refer to these regulations, and if these regulations are not being followed in letter and spirit, he can challenge the show cause notice merely on that limited ground. But for the time being, looking to the time constraint, I am not discussing it. So I am just referring it notification number 29 oblique 28 These are the detailed regulations. Regulation 3 talk about manner of conducting pre-notice consultation. Regulation 4 talk about decided to proceed the notice, how it is to be done. So it's 6 regulations which are there, and it is continued in Custom Act. And I am being given to understand that Hiriginge and Associates also deal in Custom Act. So these regulations may be relevant not under GST law but custom law. Moving further, now come 9th October 2019, when this pre-notice consultation concept is being introduced in GST also. Department by notification number 49/2019 inserted sub rule 1A under 142. That means 142 1A is being inserted, which provides that proper officer shall intimate to the person chargeable with tax and communicate the detail of tax, interest and penalty which is due under all the laws, central, state, union, etc. In DRC 01A, a form was also being introduced. I have given a summary at that form in the coming slides. Now let us read the language of rule 142 within bracket 1 capital A inserted with effect from 9th October 2019. The proper officer shall, the word is shall, before service of notice. So it clearly gives an indication that it is mandatory in nature. If that being so, if it was mandatory by way of circular and the demand, the notice was annulled by Delhi High Court, now it is on much better footing because it is a part of the rules. Kindly appreciate it is a part of the rules. Now the proper officer shall, before service of notice to the person chargeable with tax, interest and penalty under both the subsection, because the notice has to be served under section 73 subsection 1 or 74 subsection 1, and we have understood this. So before service of notice under section 73 and 74, we have already discussed it, so I am not repeating it for the sake of brevity. So communicate the detail of tax interest in part A. So DRC 01A form consists of two parts, part A and part B, and we will discuss both of them. Then where the person referred to has made partial payment of the amount communicated to him or desired to file any submission against any proposed liability, he may make a submission in part. So part B is the submission to be made by the assessee. I think this one has been repeated by me in the slide. I'm sorry for that. So part B is for the supplier to respond to it. So this is part A. Part A says intimation of tax ascertained as being payable under section 73.5, 74.5 corresponding section. Intimation of liability, please refer to the above proceeding which will refer to, and then the amount of tax, interest and penalty payable under this act, this is the period, this is CGST act and all that. Once he state that, then he is supposed to say you are hereby, look at the language very carefully, you are hereby advised to pay the amount of tax as ascertained above, along with the amount of applicable interest in full, failing which show cause notice will be issued. In case you comply with the pre-consultation notice and you admit that liability and you pay the tax and interest only, there is no mention of the amount penalty. It is because of the reason that Section 73 provides in case you pay the tax and interest before the issuance of a show cause notice, then penalty is not leviable. So this is really important to understand. If the notice is likely to be issued under Section 73, when there is no allegation of fraud, willful misstatement, or suppression, then he has to pay only tax and interest. Then, friends, it says you are pay the amount of tax as ascertained above, along with the amount of applicable interest and penalty under Section 74(5). Now, once they are alleging an element of fraud, willful misstatement, or suppression, then I have to pay tax, interest, and 15% of the tax as penalty as enumerated in Section 74(5). Failing which they say, I'll serve you the notice. So the difference between the two must be clearly understood. If the department want to allege 73, allege fraud, etc., then I am liable to pay tax, interest, and penalty. And in case the allegation of fraud, etc., is not there, there may be a disputed cases, a new issue, interpretation issue, whatever. There are a number of situations which I think I myself had discussed in my last deliberation with all you guys. So to say 74 May you have to pay tax, interest, and penalty to the extent of 15%, whereas 73(1) you have to pay only tax and interest. And he has to also mention that in case you wish to file any submission, then that submission can be filed in Part B of this form. Then he has to give his signature, his designation, and all that, which I have deleted for the sake of brevity. Then comes Part B. Here it is a reply. Proceedings are being mentioned. You can say we refer to a letter number so and so, and then both the options are given to me. This is to inform that the said liability is partially. I can discharge that liability partially or fully. If I want to reserve my right to contest the appeal, and I agree, this amount is not due from me, I can discharge only the amount where I admit there's a mistake which has been done by me and this amount is liable to be paid. So what point I intend to make here is, if in Part A he's talking about 5 lakh rupees demand which is based on 5 issues, 1 lakh per issue, I may deposit 1 lakh, 2 lakh, 3 lakh, 4 lakh, or fully 5 lakh rupees depending upon my legal stand taken, whether this demand I concede or I doesn't concede. Then B says that said liability is not acceptable. You can say I am making partial liability, difference is not acceptable, and submission in these regards are attached. Then you can give your submission why you don't agree with the view of the department, and then considering those submissions, if the department feels they can serve you a show cause notice under Section 73 or 74, as we have discussed, then you have to give your own detail. So the only thing I want to emphasize here is, once there is a DRC 01, first of all, it is mandatory in nature. If you have been served with a show cause notice without DRC 01, you can challenge it as has been done in the past in Delhi High Court case, which we have already discussed. And secondly, the important point is that you may accept part of the demand. So once you discharge that demand, to that extent, proceeding will come to an end, either 73 or 74, and rest of the issues will be litigated before the higher courts. With this, I am coming to the end of second topic, which is pre-notice consultation. Now, I want to discuss certain issues which I am being asked to deliberate upon, and then if time permit, we will go to the appeal provision under Section 107 and 112. So first of all, because these are very, very important issues, so we will try to discuss these issues in detail. And if somebody can guide me, how much time we need to keep for session? Half an hour will be sufficient?
Sir, the Q.
Chaliye.
Yes, sir. The Q&A will be from 11 to
Yeah.
11:20. Yeah, 20 or 30 minutes, which we can extend based on the number of questions raised.
So,
Yes, sir.
okay. So that means I have left with only limited time now, only half an hour. So these issues are very important. What is the difference between assessment and adjudication? You must have seen in pre-GST era, there was all adjudication, service tax, excise, customs. There was no question of any assessment. Whereas in income tax, VAT, it was the assessment. Now under GST, because this is a sublimation of number of taxes, so they have brought both the concept. Assessment means making a judgment. Dictionary meaning of assessment, making a judgment. For example, if I give you example for income tax, to file your return, the department doesn't have any information barring the return which you have declared. Your case is being selected for scrutiny, notice being given to you, and then because of that notice, you supply the information, and after considering your reply, he make a judgment. This is the amount of income tax which becomes due from you. So this is very important. And now because the assessment concept is there in GST, maybe a very limited manner, because in 2-3 situations he is to serve me a show cause notice only, and which will result in adjudication order. But let us understand what is adjudication. Adjudication is resolving a dispute between the two. Meaning, once they have served you a notice, you have filed the reply, given detailed submissions, legal, factual, documentation has been given. And after that, he served you a show cause notice. Everything is being done, inquiry, investigation, your point of view understood by the department point of view understood by you, you don't agree, department doesn't agree. So that means even now, as we have already discussed, he has to serve you DRC 01 also. After that, he is serving you a notice. So a dispute is already there. So once that dispute is being resolved, it is being called adjudication order. So assessment order and adjudication order are two different scenarios. And once we were looking at the recovery proceeding, they say if there is any demand because of any order. That is why they use the word order, not assessment or adjudication. Second important thing which I want to tell, and which most of the clients are bothered, once because the huge investigation take place, it takes number of months sometimes even year or more than a year also. The assessing things, because we have been arguing with the department has been giving its point of views, and now we are not accepting. So once the notice has come, this amount has become due to the government. This is absolutely an incorrect myth in the minds of the client or the professionals, if at all. Because of the simple reason, notice is only a notice. If you look at the last paragraph, he will say that you have been given a show cause to show why this amount shall not be recovered from you within 30 days. You are supposed to reply. So, show cause notice does not finalize the amount, neither it becomes amount payable, nor it becomes amount due, nor you are supposed to pay anything on receipt of the notice. And even if the notice contains hundreds of crores of demand, it remains a notice, and not even a single recovery can be made except section 83, where he can provisionally attach once the proceedings are on under section 62, 63, 64, 67, 73, and 74. So it is only a notice. You have to respond to it. You can seek time. Now, in the earlier law, there was a limit for issuance of a show cause notice, and there was no limit for adjudication. Now there is a limit for adjudication. With that reference in 7310 and 7410, they say 3 months before the time expire for adjudication, which is 3 years from the relevant date, and 6 months under section 74. So they have to serve your notice, and adjudication time is there. So now it will be a big challenge. You're receiving a notice only 3 months or 4 months, because 3 months is the minimum time, even 4 months, then you have to respond to that notice. But it remains a notice only. But it will crystallize into the demand very soon after 3 months or 6 months. Unlike in the past, jahan show cause notice, there was a time limit for issuance of a show cause notice, but no limit for adjudication. We have seen cases, even today they are pending. 2002 cases, 2003 cases, they are still pending. But in GST era, that will never happen, because they have to adjudicate, and that adjudication time limit is prescribed in section 73 and 74. Then you cannot be given more than 3 adjournments. It is being mentioned in section 73 and 74. People think it is a matter of right. Let me make it very clear to you. It is not a matter of right. these are three adjournments which can be sought by you, and the department can give you only when the proper officer is convinced that there are reasonable causes for the adjournment. So kindly take a note of it. This is very common misunderstanding in the minds of the professionals. We have seen cases wherein on the very first personal hearing, he has decided the matter. Once there is not sufficient ground and ground for which the adjournment is sought is not convincing. So it is not a matter of right. Again, I am cautioning. Then there is another myth, because most of the chartered accountants are coming into GST from income tax. In income tax law, there cannot be any appeal by the department against the first assessing officer order. Commissioner appeal, anybody can go to the tribunal, high court and supreme court, that procedure is the same. But in GST, absolutely on the same line, which was there in service tax and excise also, department can also file an appeal against the order passed by the adjudicating authority or the assessing authority before the commissioner appeal. It's very, very important to understand. Unlike income tax, here the department can also file an appeal, meaning thereby if you had got an order in favor by the assessing officer adjudicating authority, that doesn't mean that that is a final order. The department can file it. In income tax also, it is not final. They can serve you 263, 264, 154, 155. So other remedies are there, but they cannot file an appeal against that order. Or here in this GST law, it is absolutely on the same line which was there in service tax and excise. They can file an appeal. Then comes filing of cross objection. This is a very important concept in litigation, and most of the time I feel that professionals are not very clear about it. What is the filing of cross objection? I'll just give you a brief introduction to this concept. Let us say there is a matter wherein 5 issues were there. 4 has been decided in favor of the SSC. 1 has been decided against the SSC. Let us say the demand which has been adjudicated against me is 3 lakh. Now, I feel it makes no sense to file an appeal against 3 lakh rupees because the cost of litigation and other things are more, and even I'll have a tension, I have to attend the proceedings, I'll go to the advocate and all that. Why should I do all that? So I decided not to contest that 3 lakh. So according to me, this matter is over. Let us assume it's a commissioner appeal order. But department, looking to the relief given to you, went in appeal against those 4 grounds for which the relief has been allowed to you. Department has filed an appeal against those 4 grounds which has been decided in favor of you. Now, you can file a cross objection. Cross objection does not mean that whatever grounds has been taken by the department to agitate those 4 grounds, you have to give an argument for that. वो तो आप argument करेंगे ही, because that opportunity you will certainly get once that matter will be listed in the court and it will be decided, it will be argued by your counsel. Obviously, you will get an opportunity to defend your case against the department. But now, because the matter has not finally settled, so it gives you another opportunity कि जो matter आपके against decide हुआ था, you can also file a cross objection. So भैया, now because the matter is being litigated by the department, it has not reached the finality. I also want to contest that one ground which was decided against me. You can file a cross objection with regard to that defense, and then that will be treated as a cross appeal filed by you. So now there will be 2 appeal pending before the tribunal. Of course, for the filing the cross objection, the time limit is different, the form is different. But yes, it is a cross appeal by you. So that means the department and your appeal both will be listed together normally because they are arising from the same order. So they will be listed, and then you can argue your case, and the department can defend why this relief which was not being given to him, he is not entitled for that relief even in appellate proceeding before the tribunal. And you can defend that whatever relief we have got, we have rightly got, and the department has got no right to contest that. So this is very important concept. Unfortunately, most of the professional think that cross objection means once the department appeal is there, we have to submit our argument against those grounds taken by the appeal, taken by the department in appeal. No, it is not the case. Then, friends, one thing which I want to suggest is you never know what is going to happen in times to come. Number of decisions comes which we never anticipate. So my humble request and suggestion to all my professional brothers that whenever they are filing any appeal or they are filing reply to the show cause notice, come text ground, extended period ground, revenue neutrality ground must be taken. You never know how the case law get developed, and getting a relief of any of these two will not only result in the reduction in the tax liability, but corresponding interest and penalty will also get reduced. Let us say there is a demand of 100 rupees for 5 years. I take extended ground. I am able to convince to the authorities. Then my demand will be 60 rupees. So interest will also be on 60 rupees. Penalty will also be on 60 rupees. So the 100 which can become 300, certainly in 60 rupees it will become only 180. So the huge difference is there. Similarly, I have seen when we are taking a come tax relief, the demand is huge. So now the rate of tax are 12 and 18 generally. So it is a huge amount which comes as a review. Revenue neutrality, wherever it is possible, you must take it. Maybe on the ground of revenue neutrality, you may not get a relief. But wherever it is a case of revenue neutrality, all the judgments, I am again repeating, all the judgments, or in speaking in one term, in that case, extended period cannot be invoked. So don't forget, because we are taking all those grounds without prejudice to each other, doesn't make any difference. This must be taken. Then another common error which I find people do and which is very dangerous, that I want to discuss for 2-3 minutes. Let us say there is an order of the commissioner appeal. There is some mistake apparent on record. What do? You file a rectification of mistake application before the appellate authority and don't challenge that order on merit before the tribunal. Now that application is being rejected. So if that application of ROM, rectification of mistake, is being rejected and now you want to go to the tribunal, now the only limited purpose for which you can go to the tribunal is that this ROM, rectification of mistake, has not been properly disposed of. I feel aggrieved. You cannot argue your matter on merit. So you are restricting yourself only to the extent that this ROM has been wrongly rejected by the commissioner. So what should be the approach? My humble opinion to all the professionals who are listening to this webinar, kindly make a note of it. You file the rectification of mistake before the commissioner, but at the same time, agitate those orders on merit before the tribunal. If you succeed in rectification of mistake, you can also always withdraw your appeal. Once ROM is being done by the commissioner of appeal and the matter has been decided in your favor, absolutely no problem. You can withdraw the appeal. Only filing fees is gone, but not the amount in. This is very common mistake I have seen in the court, and particularly chartered accountants commit these kind of mistakes. So be sure, if you are filing a rectification of mistake, challenge that order before the appellate tribunal also, and rectification of. Otherwise, also the scope of ROM is very limited. It's only mistake apparent from record where there is no ground for the further argument. Most of the time, ROM is rejected. But yes, sometimes ROM may succeed also if there is a mistake apparent from record, or there is a Supreme Court authority which has come before that order is being done. So all those things are there. I am not discouraging you not to file ROM. You must file ROM, but at the same time, file appeal on merit also. In case you win ROM, withdraw that appeal. In case you don't, then you can argue the matter on merit before the tribunal. Then sometimes people don't mention in their reply opportunity of personal hearing. It is not a matter of right. If you look at the show cause notices, they says it is not automatic. You have to ask for the personal hearing. So don't forget to mention in reply to show cause notice or appellate proceeding that opportunity of personal hearing is being asked for. It is not automatic. You have to ask for it. Then the most common mistake I have seen, which normally people does in this kind of litigation, they take all legal pleadings, cum duty, extended period, merit, everything. But unfortunately, documentary evidence in support thereof is not being attached. Let us take a case of revenue neutrality. How will you prove revenue neutrality? You say this was the liability under RCM, and I would have got the credit in case I would have made the payment under RCM. Then there is no additional revenue which is becoming due to the department. But are you not duty bound to prove that there is a revenue neutrality situation? This is your return. You have to attach your return and you have to say this is the return. And in this return, I have paid or discharged my GST liability of so and so amount in cash, whereas my RCM liability in this period was much less. So what is my fault? I have simply filed one challan rather than two challan. I'll explain it to you by way of giving an example. Let us say your demand was 100 rupees. 80 rupees is paid in cash, 20 rupees has been discharged through credit. During that period, you forget to pay or discharge liability under RCM, let us say for 40 rupees. Now, in case you would have discharged RCM liability by 40 rupees, then you would have claimed the credit. 20 rupees credit was already claimed, so you would have paid cash ledger only 40 rupees. So, in any case, in both the situations, the department is getting 80 rupees. So, argument is the same, but the only thing is you have to prove through your return, yes, this is the amount which I have paid in cash. Similarly, when we argue the extended period, we don't attach the filing of return. This extended period is dependent on the date, on the relevant date. Relevant date is linked with the filing of return. If your return has been filed late, then extended period has automatically got extended. So you have to attach the returns that these have been submitted in time. So therefore, because my returns have been submitted before the due date, so my extended period expires at this particular point of time. Similarly, they will take a ground that there cannot be any demand on free supply. Fine, but in any case, you give an evidence also whether free supply is there, if at all it is there, how much is the amount of free supply. If at all the department want to give you relief only on one issue, then each issue, how much is the demand, you must quantify that. That is another point which I want to make. So not only legal pleading, but documentary evidence to be attached to prove your legal grounds. Secondly, if there are more than one issue involved, for each issue, the demand and the relief which can be there should be calculated independently so that if the department wants to give you relief on one, two, or three issue, they know this is the amount which get covered under that issue so that they can give you the relief. Another important thing, the mistake which is being normally done, additional evidence can be filed only with the permission of the appellate authority. You can argue your matter before the appellate authority or the courts only on the basis of the document which you have submitted during the adjudication proceeding. Friends, this is very common mistake which is being done by the professional. I am once again repeating, some members are very strict. They don't permit you to file any other additional document which has not been produced before the adjudicating authorities because they say he has never got an opportunity to examine the same and we are not here sitting here to examine all those things. We are not adjudicating authority. So go downstairs. So for that, there is one specific rule also in 112 is the rule number in CGST Act, which says the appellant shall not be allowed to produce evidence whether oral or documented during the proceeding before the adjudicating authority or the appellate authority, except in the following circumstances: where the authority has refused to admit the evidence, where the appellant has prevented by sufficient cause. Let us say you are being asked to produce certain invoices, and the person to whom those invoices belong, you went to him, you told him you kindly give the invoices, his office was being searched, seized, or it was in Jammu and Kashmir, there was a law and order problem, or there was some other reason. So you have to cite the reason that these documents were important for the production, but I could not produce it before the authorities below because of this and this reason. Then only you will get to this. Prevented by sufficient cause, any evidence which is relevant to any ground of appeal. So wherever you want to produce any additional evidence, you have to file an application. And on that application, the appellate authority or the court has to pass an order whether this evidence can be allowed to be produced right now. And even there is a limitation on that authorities also. They have to pass an order and they will not give you an opportunity unless otherwise they are being examined by the lower authority. So in all such cases where additional evidences are required, you file an application. Most of the cases on that limited ground, the matter is remanded back to the file of the lower authority, adjudicating authority or appellate authority as the case may be. So friends, kindly appreciate you are again back to square one और वहां आपको relief मिलना नहीं है. You don't get relief at the first appeal or adjudicating authority. So there will be a second round of litigation, and we have seen it is very common. So my humble request, suggestion, advice to all my professional colleagues, whenever you are writing a reply to the show cause notice, whatever evidences you want to rely upon in all the times to come, you must attach all those documents, failing which you have to file an application for additional evidence which may or may not be permitted to you, and in case it is a voluminous record which has to be examined by the lower authorities, then the court will certainly remand back the matter to the file of the original authority. Then 1124 is also very important. हमारे पे तो restrictions है, but in case the appellate authority or the appellate tribunal feel that some other document is really necessary, which is neither being asked by the authorities below and nor you have submitted. So there is no bar on the appellate authority or the appellate tribunal. They can always ask for the additional document. If they, in case they ask for it, then you are not at loss. You have to provide those documents to the authority and the tribunal. And if you have seen tribunal rules, then you'll find there are huge powers given to the tribunal. So they can always ask for this document. So the limitation is only on the SSC. So be careful and provide all documentary evidence which you need to provide or which you need to rely upon when the matter will be contested before the appellate authority or the appellate tribunal as the case may be. Now, I'm coming to the most important issues. I think I will not be able to deliberate on the appeal part, but yes, these are very, very important issues.
Sir,
The time limit.
sir, the
Yes.
participants has requested, if you require time, you can take even the Q&A session. They will mail us the queries separately. So if you want time, you can take it, sir. They are interested in your session.
I'll certainly deal with these 3-4 slides, which are very, very important. 107, 112, everybody can read from the books. So whatever time
Okay,
these
sir.
3 slides will take, I'll complete
Okay.
the subject and then only I'll pause.
Okay, sir.
Now, there can be a situation where there is a time limit filing the appeal. It is everywhere, either the first appeal, second appeal. Then there is a time limit. For example, if you file an appeal before the commissioner, then 3 months is the period, and he has been given a power to condone the delay for 1 month. And if your appeal is being delayed beyond that period, you have no option but to go to the High Court or Supreme Court. Because still tribunal, which are statutory courts, they are not appellate tribunals. They are not constitutional courts. Sorry, not appellate, they are not constitutional courts. Let us understand whatever has been written in these act and rules, that is perfect so far as tribunal is concerned. Of course, you can challenge the virus, etc., in High Court and all that. So once the time limit has been prescribed in the law, till tribunal, nobody will touch it. So in case your appeal has been delayed beyond that period, then certainly you have no option but to go for writ jurisdiction of the High Court or Supreme Court under Article 226 or 32. But yes, in tribunal, for example, they had got power to condone the delay for unlimited period. If that being so, then you must file your appeal along with condonation of appeal. And in case it is a condonable period, then again before the commissioner appeal, you can file an appeal along with the application for condonation of appeal. This is really important. And in this case, I'm telling you one judgment which came in 1987, and of course in absolutely different act, not under fiscal law. But that judgment is being relied upon and is being considered and is given a very beautiful reasoning why the condonation should be automatic. He says no appellant is likely to gain by not filing the return. They have given beautiful findings. I thought first of all I must discuss with that, but looking to the time constraint, I think I will give you the name of the case and the citation which you can note down from my slide. Even I have already shared my presentation with the academy. You can take that. So this is very important case once you deal with condonation of delay. Otherwise, normally you will say there are judgment which says you have to explain each day of delay sequentially. But this is one judgment which talk about in favor of the SSC, and they gave number of arguments. So looking to the time constraint, I am not going into all those arguments and the other issues which I want to discuss. So kindly take a note of it. This judgment is very important. Wherever there is a delay, you must read this judgment, you must rely on it. Then question comes, sir, there is a show cause notice for 5 lakh rupees. I had an admitted liability of 1 lakh, but I don't have money. What to do? As I told you, show cause notice is only a notice. At this stage, if I don't want to contest it and I say I want to save the penalty on that amount, because if I am making payment of tax later on, then interest is compensatory in nature. I have to pay. And now under GST, interest demand is automatic, which we have already seen when we were discussing the Jharkhand High Court judgment. So friends, kindly appreciate. If I am not able to pay, what should I do? There are two options. Either you contest that amount also, rightly or wrongly, then there is no admitted tax, which is very simple. Let us say they say you're liable to pay tax on this supply which is taxable. Yes, this supply is not taxable, I'm entitled for the exemption and all that. So make it a disputed amount. Then that problem is gone. Alternatively, you say no, I want to admit it, and then I want to say I'll pay it as and when my financial position shall ease. And on that issue, I want to save penalty. So at a later stage, the counsel can take a ground. My client admitted this liability, but because of financial difficulty, he could not pay. And we have not given any defense against this. So far as this amount is concerned, at least the penalty should not be imposed on this particular amount. So that is another option where you can admit that tax liability. You say, I am not in a position to make the payment, I'll make the payment subsequently. I'll remembering one particular case which was I was arguing in the tribunal before one of the learned member bench, Archana Vadwa. So there, I said my intention was not to defraud the revenue. I had the admit tax liability. I want to pay. So where is the amount shown in your return? I said because there is no column in the return. You should have written a letter to the authority so that we should know that your intention is not to avoid the tax, but because of financial difficulty you are not able to pay. Then I am giving you the benefit of extended period. So my point is there is no bar. Show cause notice stage, I don't have any problem even if I don't pay the admitted tax. The only thing is if I admit the tax and I say I'll pay within 3 months, 4 months, whenever the position permits, and then you deposit that tax, it will make your case very strong so far as imposition of penalty is concerned. Then comes appellate stage. Now appellate stage, these sections 107 and 112 clearly says you have to make mandatory deposit, and mandatory deposit is only with regard to disputed amount, admitted tax has to be paid in full. Now what will you do? Let us say there is a demand of 5 lakh rupees, and out of that 5 lakh, 1 lakh is admitted. So on 4 lakh, you are supposed to pay 10% before the commissioner fee. So that works out to be 40,000. So 1 lakh 40,000 is required. Now your client here doesn't have the amount. It's a big problem. So far as in case your client is short of liquidity, if he has that kind of a liquidity wherein he can pay amount as specified 107, make the whole amount disputed. Don't admit anything. 5 lakh, the whole amount is disputed, then you're liable to pay only 50,000 as against 1 lakh 40,000. But in case you don't have even 40,000, you can pay the amount, file the appeal before the registrar. He will issue you a deficiency letter. In the meanwhile, you are able to deposit, kindly debit it, because the deposit should be available on the date of hearing. That is another view which is coming before various courts. They say before the appeal is being heard. Appeal will be heard in the tribunal on the day of hearing, not before that. But then are looking to the fact that this proposition being misutilized, Delhi High Court is against it. They say that you have to deposit the tax at the time of filing the appeal. So I don't know about the other states, the kind of judgments, but yes, you need to be very, very careful. These deposits are mandatory now and have stood the sanctity of the courts also. Nobody says these provisions are ultra vires. So that means the only option available to me is to make the whole amount disputed so that my amount which I have to deposit can get reduced. And once they get reduced, I still don't have a time. I can make some mistakes in the return, file defective return. Once there is a deficiency letter being issued, then I can deposit rest of the amount thereon. Then another point which I want to discuss is don't forget to take all legal grounds. There is no doubt legal grounds can be taken at any stage. But in case you are sure that this ground, once you will argue that opponent can object to it, particularly it happens in those cases where the judgment comes in favor of the SSC. And when we are filing the original appeal, we have not taken that ground because at that point of time, that judgment was not available. Now it is available, I want to take. So the safer course, in my humble opinion, will be to file an application for additional ground. And while filing that application, number of judgments are available in the rest by law. Both can be, all those judgments can be relied. But in case you are filing this application before the tribunal, always cite the case of higher court, high court, supreme court. Filing this ground at high court, cite higher court judgment. This is my suggestion because nobody will rely on the judgment which is given by the authorities below. Now, sometimes what happens, there is a client who comes to you at a later stage, whereas the original reply has been submitted by some other professional colleague. And now, after realizing that that gentleman who filed the initial reply is not up to your satisfaction, and there are a number of other grounds which are to be taken. However, the personal hearing has not come to you. So my humble submission is, in all those cases, what you are supposed to do, you file an additional submission wherein that reply, whatever grounds has been taken, can be ignored, or you can submit a comprehensive fresh reply also, whichever is convenient to you, looking to the time frame. Sometimes there is no time available to make out a comprehensive reply. In that case, file an additional reply on the date of personal hearing and submit all those documents which you feel you want to rely upon and take all those grounds. He is duty bound to accept. And sometimes you go there, you are arguing a matter before the authority, and then you realize he should have relied upon these judgments, but he is not willing to give you any time. He said, this is your third PH or this is the PH I have already granted. I am not going to give you any further time. Don't get disturbed. Come to your office, whatever case law, whatever document you want to submit, make a submission of it, send it through registered date. Because there are a number of judgments available, but once those judgments have been placed on record before he could pass an order. So that authority is not supposed to pass the order, either the adjudicating authority appellate the very next day or within 3-4 days. The order normally takes a long time, sometimes even a couple of months. So once those requisite documents and case law you have produced on the record, you are having a documentary evidence, and that is not being considered. At the higher level, when you are agitating those matters, you can always say, I have already given this document, maybe on the date of PH, because he was not permitting me to give a adjournment or to file this document. Sometimes they allow you also, if PH is being concluded, you can file those documents within 7 days, 10 days. Then you can submit it, no problem. Wherever it doesn't do that, this is what I have sent to registered ready, and these documents are available on record. He is duty bound to consider it. In case he has not considered it, the document which has been submitted after the date of personal hearing, but before passing the adjudication or the appellate order, absolutely no problem. You are at home. You can take all those defenses, and even those documents are deemed to have been submitted before the authorities below. Then sometimes a very interesting situation comes. In the case of proprietorship, that proprietor is not available for signing the appeal. In case of partnership, the person who is supposed to sign the partnership working partner is not available, and the limitation period is likely to expire. What to do under that situation? Okay, time limit has to be strictly added to in case of appeal and reply procedure. There is no doubt about that. In case of inordinate delay, one practical solution is you deny the receipt of that order, and if there is any documentary evidence available on the department, then you are in trouble. In case the department doesn't have any evidence to say that this reply is being received, then you can deny that date, take that date, and file the appeal. And once that particular gentleman is not available, what to do? You can take an authority or make an authority letter, get it signed by somebody, and file it with the registrar. First of all, normally he is not having the signature in his record. He will admit the appeal. And tomorrow, if it is being objected, then you can remove that defect. File the appeal in time. Don't take that chance. And take proper authorization, resolution, sign it by somebody else, and then submit it in case it is still defective, because the rule specifically says it has to be signed by such person and not anybody else. And the law is very settled. Once a particular thing has been asked to be done in a specified manner, you cannot change the manner. It has to be done in that manner only. 37B, the notice was to be served in registered AD. If it is being served by speed post, Karnataka High Court and number of other High Courts said no. You have to serve the notice once the manner has been defined registered AD. How can you send it by speed post? Later on, some High Court said speed post is equivalent to registered AD. So all those litigation issues can continue to be there. But file the appeal once in time. Once it is a defective appeal being filed, and defect memo is being issued, you can always correct it in the times to come. There is no problem. Now coming to the next, which I inadvertently confused both of the issues. Now coming to the second one, inordinate delay. 3 साल बाद 4 साल बाद आया, वहां आपके पास कोई चॉइस नहीं है, unless otherwise you can make sure that this service which is being claimed by the department is neither available on record. If the service of the department is available on record, then don't waste your time before the authorities below. Go to the High Court, Supreme Court, which are the constitutional court, and explain them the circumstances which are responsible for this. These are the only two courts which are constitutional court which can go beyond the mandate of law, and they can pass an order looking to the peculiar circumstances of the case. They are being permitted to file the appeal if it is being submitted within 30 days from the date of this order. And in case they want, it should not be made precedent. They will say if this order has been passed looking to the peculiar circumstances of the case and should not be quoted as a precedent. So we have seen that kind of an order also. So if that being so, either remove the service, or alternatively, you can go to the High Court and Supreme Court and take relief, where there are chances in view of natural justice, even if the time limit is prescribed under the law, they have granted permission to file the appeal within a reasonable time after the disposal of that writ. So that is one area which I want to discuss. Then last point, you are filing an appeal before the court. It is likely to take 3 years, 4 years, 5 years, and now in case we look at GST, we are in big trouble because the tribunal is not being constituted even today. So my humble submission is, in that particular situation, if the issue is likely to have a recurring nature, you can file an application, miscellaneous application before the court, that this is an issue which is bothering this gentleman because every day he has to make a supply and the rate of tax is not clear. We are against that order only. So in that case, your case can be taken out of the term. You can make a mention of this in one of the days when the court is working, and then after mention, this application can be filed. And once you file an application, still it is likely to take a huge time. And let us say the tribunal is not there like this difficult period, and there are only urgent matters which are to be taken up. Then before the court start, you can go to the court and mention to have filed this miscellaneous application for early fixation, which is very important. But unfortunately, it is not coming on the board because of this and this reason. And then the court can grant you and date for hearing of that miscellaneous application. And in hearing, if you are able to convince them, then your appeal uh, can be heard out of time. Then comes, sometimes we are all human beings, we argue certain matters, and once we argue certain matters, there are certain grounds which we fail to mention. While arguing, I forget about certain issues, and the hearing is being concluded, and the order is being passed. So you can file an application for rectification or review. Of course, the scope is very, very limited. Review is asking for the moon. The very famous Supreme Court judgment in the case of Northern Cattle, where it says review is nothing but asking for the moon. It is not a opportunity for re-hearing the matter. Similarly, in the case of rectification, the scope is limited to remove the mistakes apparent from record. But we have seen from our experience that in case you are wise enough and sometimes the court is not so strict, whatever grounds you have not taken, you are able to argue in such a manner that it appears as if it is an application for rectification. You can do that. With this, now comes to appeal section, which I think are the huge slides. I would not like to deal with that, and I would like to conclude my discussion here because I think the most important thing was practical issues and common errors, which I have already discussed. Now, with this, I would like to give a pause to my deliberation and over to the moderator for question answer sessions, if any.
Yes, sir. Thank you for your session, sir. Now I will read out the questions raised by the participants one by one for your easy reference, sir.
Yeah,
The first
please.
question, the first query by Mr.
Can we remove this slide? Can we remove this slide?
Yes, sir. Yeah. I have removed the
Good.
slide, sir. Yeah. Okay. The first query, sir, there is a under section 73 and 74, the section itself provides power for the officer to levy penalty. Can he levy additional penalty under section 122 or 125 apart from penalty provided under section 73 and 74? If he can, yes, sir. If he levies such additional penalty and I have paid the demand along with the tax and interest within 30 days of such serving of notice, will the penalty levied under 122 or 125 will also get nullified?
देखिए 122 is a penalty for specific offences.
Yes, sir.
73, 74 is only a notice.
Okay,
whatever
sir.
penalty can be levied for a specific offence, that is an independent proceeding at all. Let us say I was supposed to give an intimation within 30 days, I failed to do so. You can impose a penalty. But because of that, it is not important कि आपका credit डिसेल हो गया. I'll give you one practical example. Let us say,
Okay, sir.
you have made certain claim for the credit, and while making the claim, you forget to get your RC amended, and in the absence of that address on the RC, your credit is being denied. You go to appeal, you say that my credit cannot be denied simply because it's procedural lapse. I failed to get my RC amended. Later on, I made an application for amendment, though late, and that RC is being amended. So at that point of time, the penalty for not giving an intimation in time to include your additional place of business into the RC that penalty can be
Okay.
levied. So this
Mm-hmm.
credit, which they say you have wrongly claimed, and then you can be
Mm-hmm.
subject to penalty equivalent to the amount of tax enrolled under Section 74 under Section 76. So kindly
Yeah.
appreciate these are not penalty provisions. Penalty provisions are 122 and other provisions wherein they
Okay.
talk about this situation. This is
Mm-hmm.
where you have wrongly claimed the credit, not paid the tax and all that. If it is through fraud, then this an amount which you're liable to pay. Penalty for
Okay.
specific offense can be made
Mm-hmm.
only under Section 1.
Okay, sir. So in summary, the relief which they have given, that if I paid the tax demanded within 30 days, will apply only to the penalty which is referring under section 73 and 74, not for specific penalties.
Absolutely.
Yes, sir. Thank you, sir. The next, we will move on to next query. It is a general query, sir, by Mr. Gangadhar Haldikar. Sir, can you throw light upon difference between assessment and adjudication?
I told you, assessment is making a judgment adjudication when the dispute arises. So long
Mm-hmm.
as excise services custom are concerned prior to GST, it has always been adjudication. Assessment is
Okay.
only under income tax where there is no prescribed procedure for making investigation inquiry and then issuing a notice. In
Mm-hmm.
fiscal laws, there can be two situations. So here also, if you look at the assessment provisions, self-assessment, provisional assessment, non-filers, registered person, they are very limited cases. In all other
Mm-hmm.
cases, it is all adjudication proceedings.
Okay. Okay, sir. The next query by Mr. Swapnil Kolte. Sir, can you briefly explain what does that Katiji judgment explains in relation to that continuation of delay?
So that judgment says it is a substantive right. It cannot be denied to any person simply because he has failed to file the appeal in time. Secondly, they say the assessee is not going to gain anything by not filing an appeal. If he is
Okay.
prevented by sufficient cause, then he should be given substantive right simply because it will be totally unjust if you
Mm-hmm.
simply deny the person an opportunity to present his case simply because there is some delay for the fault of counsel or some other things. So there are 5, 6 points which they have taken. 2, 3 I remember which I have dealt with right now. So my request is
Mm-hmm.
to kindly go through that judgment and read it.
Yeah. Okay, sir. The next query uh, by Mr. Sanjeevan Salvi. Sir, you have deliberated that we can appeal for rectification of mistakes. In case a commissioner appeal has issued an order with wrong facts or made mistakes in his order, how to appeal for rectification of mistakes and what are the prerequisites for filing a appeal for rectification of mistake application?
First of all, there is a total misconception and understanding. I never said
Yes, sir.
appeal for rectification of mistake. Rectification of
Mm-hmm.
mistake is only an application. It is
Okay,
the
sir.
inherent right in any fiscal law, even if there is no provision, and you
Okay.
feel that the order passed by the authority is suffering from certain typing error. For example, while confirming the demand, he mentioned rather than 2 lakh 20 lakh rupees. Or
Mm-hmm.
while calculating, he has mentioned the rate of interest under different section under which it is leviable, or some
Okay.
mistakes which are apparent on record. So then
Okay.
it is not appeal, it is only an
Okay.
application. And
Application.
for this
Okay.
purpose, there is a time limit in every statute.
Mm-hmm.
Normally 60 days period is there. I don't remember in the GST law. I have not filed an appeal so far. So
Okay, sir.
earlier law it was 60 days. So within that period, you can file an application for it. Because if that mistake is likely to be rectified by the commissioner itself, why to go for all this long procedure of agitating the same before the higher courts? So therefore, I said ROM
Mm-hmm.
must be used, but at the same time, because once you file an ROM and don't file the appeal on merit, then that time limit will lapse. And once
Okay, sir.
he has exercised his right correctly by disposing of the ROM against you, then you have no option. So my
Okay.
suggestion was, because both the time limit goes side by side, you file an application for ORM, but don't leave this appeal to become time barred before the tribunal. file an appeal on merit before the tribunal pursue your application. Even if you file an application for ROM within time, what is the guarantee he will listen to you or he will give you a hearing for another 2, 3, 4 months? So that time limit, which is being prescribed for a higher authority, both the action should be taken simultaneously.
Yes, sir. Okay, sir. Hope the query has been answered. Moving on to next query, sir. Sir, generally, the department always try to issue notice under section 74, even though we don't have any malafide intention. What is your suggestion for us how to proceed in such cases?
When I was dealing with common error, I said you always dispute that extended period. Always dispute it. For example, there is one judgment which is against you. In the meanwhile, when you file the appeal, this another judgment comes in favor of you. Then you had a very good ground. If there were conflicting judgment available during that period, so extended period should not be invoked. If the department is in the habit of invoking 74 all the time, so we have no option but to contest that ground all the time before the authority.
Okay, sir.
Can you stop the proper officer not to invoke the allegation of fraud? Is it in your hands? Wherever it is in your hands, you do that. I know that also. But once you are not able to convince him and he is making an allegation time and again, then you have no other choice but to contest it.
Okay, sir. The next query, sir, in order to recover the penalty levied under section 122 and 125, whether the department has to follow the issuance of notice?
Absolutely. There are certain appeals which only roam around on the penalty only. For example, in transit, your conveyance is being stopped and he has charged you certain penalties. There is the option you have to go. For example, you are not disputing the tax liability, but you have to agitate that penalty. You must have seen from your experience also. There are number of appeals which only runs on penalties. For example, 122 has imposed a penalty of this. No, sir, I have not committed a mistake. Penalty cannot be levied. And even when you look at the pre-deposit conditions, they also visualize a situation wherein there can be an appeal with regard to penalty only. They say in case the appeal relate to penalty, then you are supposed to deposit 10% of the amount of penalty only.
Okay. Okay, sir. Sir, I think we have came near to the end of the Q&A session. I am reading out the last query for the day, for the session. Sir, can you give us a brief about the pre-consultation notice once more?
I have already shared my PPT. I said this concept started in 2015. Then there have been two circulars, 2015 and 2017, where it is being mandatory in all the laws. At that point of time, Union government used to administer central excise, service tax and excise. So once this pre-consultation procedure is not being followed, Delhi High Court gave a judgment in our favor. Then regulations are being made out in custom law, which is still continued. And so far as GST is concerned, only in the month of October 2019, they inserted rule 142.1a. So meaning thereby, any show cause notice issued subsequent to that date, they have to follow 122.1a. If they are not following, this should be my first defense when I am agitating that show cause notice. They have not followed this principle, and on this limited ground, this show cause notice needs to be vacated.
Okay, sir. Okay, sir. Hope it has been clarified to the participant who has raised this query. Sir, by the end of this clarification, we have come to the end of this session, including Q&A. I would like to thank you personally and also on behalf of Hirenge Academy for spending your valuable time to provide valuable insights and value addition in relation to demand and recovery to our participants. We wholeheartedly thank you for your dedicated session, sir. Thank you, sir.
Player was mine, Hirenge Academy. I am part of it, because Madhukar is a good friend of mine. I never considered I'm not part of the academy. So it is my
Yes,
place.
sir.
Thank you.
Thank you, sir. Thank you all. Thank you, sir. So that's an announcement for participants. We have shared the link for the PPT for next session in the chat box and also in Q&A box for your easy reference. You can kindly download the PPT from that link. Currently, we will go for a break for 15 minutes and we will resume by 11:40 with the next speaker. Thank you all for your patient listening. We will be resuming after the break, short break.
Sure. Okay. Yeah, understood. It's fine, no? Yeah. Okay, Arjun.
A very warm welcome to all participants after the break. Now we will resume with our certification course for the second session of the day. The second session of the day deals with assessment and revenue audit and how to deal with the audit replies and other common 10 common issues dealt by CA Venkataprasad, who is a eminent faculty. About the speaker, CA Venkataprasad is a qualified chartered accountant and completed his Bachelor of Law from Osmania University. He appears before CESTAT and various tax authorities. He is a faculty at Institute of Chartered Accountants of India, NACIN, and has given lectures at various other trade and professional forums. He has also been faculty for providing training to Central GST Officer. He is an active contributor of articles in GST Law Times and other professional forums. With this brief introduction, I warmly welcome CA Venkataprasad sir for deliberating the session with topic assessment, scrutiny, revenue audit, and dealing with 10 major issues. Venkataprasad sir, we welcome you. Kindly take up the session forward.
Yeah. Thank you, Arjun, for your introduction. And yeah, welcome all the participants for the second session of the today. The topic for the second session is assessment, scrutiny, and revenue audit. And first, there are two parts here in this session. First, we'll cover the assessment, various parts of assessment, various provisions relating to assessment procedure and implications. Then we'll go into the department audit. There we'll discuss the intricacies of the provisions relating to department audit. So moving on to the first part of the session, that is assessment. We'll cover the various types of what are the different types of assessment, and each type of assessment, how the GST law provisions has dealt with, and what are the procedure prescribed, and what is the impact and course of action to be taken by each for each self assessment, for each type of assessment after or during the course of assessment. Then we'll get into the what is the department audit, how department audit will be undertaken, and what as a taxpayer or as a representative or as a professional, how we have to handhold the our client or taxpayer in course of the assessment as well as audit. Then to start with, in assessment, there are different types of assessment as far as GST is concerned. Before going to the types of assessment, there is already there is a definition of what is assessment. Assessment means, as per section 2 subsection 11, it says a determination of the tax liability. That means there will be a determination of tax liability and includes self-assessment, provisional assessment, summary assessment, and best judgment assessment. That means assessment generally means you are determining some tax liability, and it also includes self-assessment, provisional assessment, summary assessment, and best judgment assessment. So basically, the definition of assessment itself describes the various types of assessment which are dealt with in the section from section 59 to section 64. So each type of assessment is dealt by separate section. We'll discuss each type of assessment in detail, how the GST provision has dealt with it. So among all other types of the assessment, first type of assessment is a self-assessment. So then second type of assessment is provisional assessment, then scrutiny assessment. The fourth one is a non-filers and unregistered assessment, then summary assessment. So each assessment deals with a specific scenario, and has its own ramification, its own procedure, and its own has implications. Now we'll go into the first type of assessment, that is self-assessment. before discussing the in and about the self-assessment, the background of self-assessment, if you look at, you must go to the central excise and customs provision. There were the days in 1980s and before that, uh, vehicle has to move from the factory. The central election officer has to come physically to the factory gate, and he has to verify the consignment, and he has to see the document. Then he has to sign. Then only vehicle should have been moved. That means the movement of the goods is under the supervision of the central excise officer. Unless central excise officer comes and signs, the vehicle would not have moved. That means assessment is done by the uh, department person and not by the assessee. So, in the 1980s, before that, the globalization and various industrialization, the scope of taxpayers as well as the volume of taxpayers is very minimal, and that's the reason government also is have a control to or manpower to control the that complaints as well as to support their clearance of each goods. However, with the advent of the globalization as well as increasing the voluminous of the business and also global practices of allowing on self-assessment, that means self-assessment, the government also has started moving and shifting to the department supervision assessment to a self-assessment. That means self-assessment is a facility where government officer is not going to come and intervene at the time of assessment. They are going to allow you on your own. That means they are going to give a facility. You can assess yourself and pay duties initially, and you can move the goods and make the tax compliance. So this is what the background of self-assessment. Coming to the GST provisions, what is self-assessment is dealt by Section 59 of the CGST Act, and it was the self-assessment was mentioned that all registered persons, that means Section 59 says all registered person shall self-assess their liability and furnish a tax return under Section 39 of the CGST Act for a tax period. So if you see, there are various parts of this Section 59. First, it says all registered persons. That means there is no exception to the small or big, or there is no exception to the wherever you located. Once you are a registered person, you must self-assess your liability. But if you see the comparative reading of the central excise provisions, still there are some goods which require the supervision of the central excise officer, like cigarettes, tobacco products. There are some goods where there is a supervision of the department office is still required. Otherwise, all other goods are allowed under self-assessment scheme. As far as GST is concerned, there is no restriction to any goods or any commodity or any taxpayer or any place. Once you are a registered person, you must self-assess your liability, and you have to. This is first requirement. The second requirement is that you must self-assess your liability and furnish that how self-assessment will be done. Is it is clearance specific, like central excise 1980s background where officer is to come for each clearance and he is to sign? No, it is not a transaction specific, it is a return specific. That means self-assessment will be based on a return. So that's fine, sir. The return is nothing but a summation of the various transactions in particular period. So then return is for which period? Is it for a quarterly or weekly or monthly or whatever it is? So as far as GST, initial framework of GST, everybody there is a monthly return. However, for composition taxpayer, it is quarterly. However, there was various developments. As on date, for self assessment is for large taxpayers having more than 5 crores turnover, it is monthly. uh, they have to file the return. Second is for a small taxpayer having less than 5 crores turnover, they have to file quarterly. So there is another exception to the composition taxpayers. They are have to file returns yearly, not on monthly or quarterly. So like this, depends on the status of the taxpayer, the periodicity of the self-assessment would differ, but the requirement of self-assessment would be same. That means the requirement is there for all, but only the periodicity and the forms and procedures of self-assessment is only different. But as far as the fact remains that everybody has to self-assess their liability and pay tax thereon. Now, there is a, this is what the section 59 talks about it. Now we'll get into the various common questions or issues or the errors which are committed by the while making self-assessment. So having understood, yes, I have to every month, if I am a normal taxpayer having more than 5 crores, I have to file GSR 1 and 3B. So that is fine. So I am making the self-assessment and paying it. However, for various reasons, knowing intentionally or intentionally, I have filed GSR 1, but I have not filed GSR 3B. So this is a common practice where people are not able to pay tax. They are what they are doing is in order to enable their recipients or customers to take ITC, particularly in light of the this rule 36(4), which prescribe that you must your supplier has to file and show your ITC invoice there. So many people what they are doing is they keep on filing and they are very regular in filing GSR 1 and showing the outward supplies, and so that their buyer is supposed to take the ITC based on the 2A. However, because of financial problems or various reasons, because they can't pay tax, so they are not able to file a GSR 3B. They are not filing GSR 3B. Now the question comes is, mere filing of GSR 1 is a self-assessment for the purpose of section 59, or it is that I have to file GSR 3B also, or what is the return? Which return is a conclusion that I have self-assessed my liability? Is it GSR 1 or is it GSR 3B or something else? As far as if you go back to section 59, it says a return under section 39. So the return under section 39 is GSR 3B, not the GSR 1. Thereby, once if you are not filed GSR 3B, but you have filed GSR 1, your self-assessment is not completed. Still, you have to file GSR 3B. Then only your self-assessment is set to be completed. However, there is some background to this interpretation is that if you see initial framework of GST, there are three types of return or three forms of returns: GSR 1, GSR 2, and GSR 3. GSR 1 is a outward supplies return, and GSR 2 is a inward supplies return. And the summation of these two is nothing but a GSR 3, which is a monthly return. If you see the original provisions of GST in the initial year, it is a what is written under section 39 is GSTR 3, not GSTR 3B. However, considering the various compliances are related to the GSTR 3B now, and GSTR 2 and 3 was deferred now. So there are various implications from the ITC point of view, a liability point of view, etc., etc. So if you strictly go by the provisions of section 39 and GSR 1 and 2 and 3B requirement till August 2019, till August 2019, the provisions gives a meaning that GSR 3B is also not a written under section 39. What is written under section 39 is only GSR 3. Thereby, unless that government actually implements GSR 3 provisions, till that time self-assessment would have not completed. However, considering the Gujarat High Court decision in case of AAP and Company Limited, and also the various intricacies which benefits the taxpayer, also damage the government revenue, they have made retrospective amendment to make that GSR 3B is a written under section 39. Thereby, it is a once you file GSR 3B, your self-assessment is completed. So to summarize, the conclusion is, with in light of the retrospective amendment in Rule 61, which is made under section 39, GSR 3B is a self-assessment return. Whenever you file GSR 3B, then only your self-assessment is completed. This is fine. So, sir, why you should bother about self-assessment is that the obligations, the very important obligations as a taxpayer and the GST is on you, that you must self-assess your liability and pay tax. If you are not self-assessed your liability, that means that liability did not stand paid. Next, what is the course of action if I commit any mistakes in the self-assessment? Let's say we'll take an example of IGST paid on the ocean freight. So ocean freight to the, let's say I imported goods on CAF basis, where I did not pay any, I did not incur any shipping or shipping line charges or whatever freight charges. The freight charges are paid by my foreign supplier, and I only paid him the total price to my foreign supplier, and nothing I have incurred in relation to the ocean freight. Might was paid by the my foreign supplier. However, you must aware. I hope you would have gone through tax provisions and all. So there you would have given a background how ocean freight government is trying to tax. So, however, till Gujarat High Court, in the case of Mohit Mineral judgment comes, there was going by the notification. It was said to be you are liable for IGST on the ocean freight as an importer, though you are not incurring the freight on your own account. Even if you are not paying that, so you have to pay GST on the under reverse charge. However, accepting the various arguments of the taxpayer, Gujarat High Court in case of Mohit Minerals has held that IGST on the ocean freight is not liable when you are importing goods on CAF basis. That means they have struck down the RCM liability whenever you are importing goods on CAF basis. Let's say like this, there are various mistakes you may be committing it. So how we should, one must rectify in this kind of mistakes. Their mistakes can be categorized into various brackets. One is that I would have paid excess liability. That means my invoice value is 100 rupees. I've correctly shown in GSR 1, but I have while filing GST 3B, I would have paid GST at 120 rupees. That means I have over reported the liability. That means to that extent of 20 rupees, I have paid excess. So how we have to rectify? I have paid under less. That means it is 120 is my actual liability. I have paid 100 rupees. Like this, there are various common errors committed in will be committed in filing the GSR 3B or GSR 1. So now the question boils down to how I would be able to rectify that mistake. Is that the answer is not very surprising. The answer is that you can make amendments and you can rectify the errors while filing returns for the subsequent month returns. Depends on the type of error what you have committed. The manner of you rectifying will differ. It will be different. So, however, as there is a, let's say you are not able to rectify it, the remedy with you is that you can go for a refund. That means you don't have a turnover in coming future, but you are paid excess liability, which you are not even in a position to adjust for the future liability. Then what you can do is you can go for a refund. So this is also a common practice which is there. However, if you see the self-assessment provisions and also the definition of assessment in GST and requirement of self-assessment in customs, the provisions as far as assessment definition is same with the when you compare with the customs law. So why I'm going to customs law is that there is a Supreme Court decision very recently in the year 2019 that assessment includes self-assessment, which I've read in the beginning of the session. So when assessment includes self-assessment, whatever the mistake committed in self-assessment should not be, refunded. Let's say the background of the case in ITC Limited is Supreme Court decision, which I am referring to is Supreme Court decision in case of ITC Limited. Is that so? What happened in that case is that so I have imported a goods and I filed a bill of entry, and what happened is in shops my CVD rate is 6%. I applied 6% and I paid custom duty at 6%. Subsequently, I came to know that it is not 6%, it is 1%. Then I have gone back and asked for the refund of excess paid custom duty. I said, look, I filed bill of entry with 6% custom duty, but my liability is only 1%. So 5% excess, custom duty was excess paid. Give me back by way of refund. Then the officer told, no, that is, you already filed your bill of entry under self-assessment. Once you file bill of entry under self-assessment, You can't come back and say that I have paid excess and you have to the refund. You can't claim refund on your own of self-assessment. That means what you are self-assessed already will be final unless it is reversed by somebody else. So they said you can't go for a refund unless the self-assessment is reassessed or it is modified by somebody else. Without modifications, without reassessment by anybody, the excess paid any or excess shown liabilities will not be refunded automatically. So the Supreme Court also agreed to the point, and they said whenever there is excess payment of liability, you should not directly file refund claim. You should file an appeal against your own bill of entry and get that bill of appeal settled in your favor. Then you apply for refund. That means they said once you are self-assessed your liability, any excess paid will not be given automatically. It will not be refunded automatically. You must file an appeal and nullify that self-assessment, and to say that there is some self excess paid, then only you can apply for refund. So there was some interpretation by some part of the experts here is that ITC Limited rationally will apply to GST also. Thereby, whatever the mistakes are committed or any excess payment in GST, one must go for a appeal against the GSTR 3B, and you should get it the appellate order and then go for a refund of it. They should not go for a automatic rectification. However, if you ask my view, in my view, that is not required. Customs provision is different and GST law provisions are very different. So if you see customs provision, it is transaction specific. For each transaction of import, I have to file a bill of entry, there is no any except filing a bill of entry. There is no other return or etc. anything. So once this transaction is done, it is done. So there is no a link of various transaction. Unlike GST, if you see GST, it is a continuous compliance. Every month I am going to file a return, and there is a various facilities for credit note, debit note, and amendments are allowed in the GST law. Thereby, you can distinguish the decision of Supreme Court in case of ITC Limited and say that customs decision is not applicable to GST. Whatever the mistakes which even leading to excess payment of tax also, I can either directly go for a refund as an excess payment of tax, or else I can adjust for the other liability, subsequent liabilities also. Luckily and fortunately, even government has also given circular in the year 2017 itself, saying that whatever the mistakes you have committed in your self-assessment liabilities, you can amend, rectify in subsequent month returns. If you are not able to rectify or amend it, that means you are not the future liabilities are not sufficient to cover the excess paid liabilities. You can go for a refund. So the conclusion is that whatever the rectifications or mistakes committed in self-assessment liabilities can be make rectified in subsequent month returns, and the decision Supreme Court decision in case of customs will not be relevant here, and that will not be applied here. Now another important common error is that, so like how I report excess liability or I report under liability, I also sometimes I would have taken excess ITC instead of eligible ITC. That means I am eligible for a 200 ITC, 2 lakhs ITC, but I would have taken a 2.5 lakh ITC. Reverse also may happen. I am eligible for 2.5, but I would have taken 2 lakhs. That means short ITC. So all these cases you can make rectification in the subsequent months. There is one different type of error which committed by the errors, taxpayers is that. So I have applied a wrong type of tax. My liability is IGST, but in the returns I have shown it as a CGST plus SGST. So what to do now? So if you look at the provisions, the wrong type of tax, there is a section 77 which says that whenever there is a wrong type of tax was paid instead of right tax, that means CGST, SGST was paid instead of IGST. The section 77 says you pay right tax and go for a refund of wrong tax. That means in my case, I should have paid IGST, but I have paid CGST and SGST. So the section says you can go for a refund of the right tax, wrong tax, and you pay right tax. However, considering the that initial years of GST, because many people knowingly or unknowingly would have committed errors in this kind of repeated errors of paying wrong tax. So what government has said is that instead of you coming directly to the refund, you can apply, you can rectify, you can adjust that liability in future subsequent month return. So I'll be allowing that rectification. So if you strictly go by the GST provisions, whenever there is a wrong type of tax was paid in GST or return, that means IGST, instead of you paying IGST, you would have paid CGST, SGST. The correct procedure is to, you have to go for a refund of CGST and SGST, and you again have to pay IGST. However, luckily the section itself says there will not be any interest for the intervention period. But considering the practical scenario, the government itself has come with a circular saying that instead of you coming for a refund, yourself can adjust in your return. So thereby, though it is not clearly coming out from the GST provisions, wherever there is a wrong type of tax paid, you can adjust in the subsequent return also. Then there, if you see our discussion, GST 3B is a discussed that return filed under section 39 is a self-assessment return. That means once I file a return under section 39, it is self-assessment. So what happens while filing annual return, some unreconciled liability, or I have come across some other some liability which was not at all declared in GST 3B. Let's say if you go back to 17, 18 GSR 9s, which were filed in, most of the people have filed in January or February month of 2020. So they have paid some, any shortcomings of liability they have paid in 2020 pertaining to the 2017-18. So that they have paid how? They have paid using the GSR 03. They are not declaring any GSR 3B of January 2020 or February 2020. Now the question comes is, whatever I have paid through DSR 03, DRC 03, is it a self-assessed tax or not? So it is a self-assessed tax, because if you see the assessment self-assess provision, it says self-assess means determination of tax liability by filing the return. So that means you can say whatever you are self-assess, it is an assessment. Thereby, whatever the payments made through a DRC 03 is a assessment by you only. It is not assessment by somebody else. Next, unpaid amounts in self-assessment direct recovery. So here also there is a fine example and popular example of conflict between the GST law and GST network. If you see GST law, it says it allows taxpayers to file a return without payment of tax also. That means you can declare your liability without payment, actual payment also, you can still file a return. Only thing is that it will not become a valid return, but still you can file a return. This is what the GST law framework. But if you see GST network, how it was framed, it won't allow you to pay tax unless you pay tax fully. That means though GST law allows you to file return without payment of tax, but GST network doesn't allow. So considering this conflict for a time being, keeping aside the conflict and for a time being, simply going by the GST law provisions, which says you can file return without payment of tax also. That means you file a GST 3B without payment of tax. That means you don't have cash, but you want to make a complaint because you don't want to defer the complaints, because it unnecessarily increases the late fee also. So there is an option to you to file return without payment of tax. However, for the timing, as I said, there is no provision facility available in the GST network. So assuming this is there, so what will happen to this is, wherever you declared self-assessed your liability but it stands not paid, the government under section 7512 can directly recover from you. That means they did not give any show cause notice, did not follow any procedure. They can simply come to your bank and attach your bank account or properties, can recover your liabilities. Because why this is, because you yourself have self-assessed that I am liable for this liability. Then there is no requirement that I have to come to you and ask for a show cause notice, pass an order, and you going for a refund, you going for appeal. So all these procedures are not required. However, this discussion would be academic at this stage. because now GST portal is not allowing to file a return under without payment of tax. Assuming it is allowing in future, you must remember that whenever you are wanted to file return without payment of tax, you must remember that government has a power to recover tax, such declared tax directly from your bank account or property. They need not follow any adjudication proceedings, no assessment proceedings are need to be followed. So you must remember in future whenever you are trying to file without payment of tax, whenever portal allows that. Next, next issue is use of ITC. See what happens. I know that I have to pay some liability in this month, but at the same time I don't have sufficient ITC. What I will do is I'll defer this month liability to next month because I expect some ITC in the next month more than what is required. So what I can do is, if the question comes is the liability what I outward liability what I would declare is, let's say it is for March 2020, but I have paid and declared that March 2020 liability I have not declared in March 2020 GST 3B, but I have declared in April 2020 GST 3B. Here the question comes is whether ITC which I have availed in April 2020, can I use that April 2020 ITC for payment of tax pertaining to March 2020? So that is the question comes. So because this question is also coming from a pre-GST background, because if you see Senvat credit rules, it says the whatever the Senvat credit accrued or available at the end of the taxpayer, that only can use for the liabilities of that particular period. That means in my example, if you apply the Senvat credit provisions, it is you are not allowed to use the Sunvat credit of April for the month of March month liability, though you are paying in April. However, in GST, that restriction is not there as long as whatever the liability declared in that particular return, you can use ITC available in that return. That means, in my example, you can use April 2020 ITC for the payment of March 2020 dues also. Only thing is that only there are two requirements you should keep in mind. One is that in order to avail April 2020 ITC for payment of March liability, you must declare March liability in April, not in March return. Because once you declare in March return there is no ITC, so we have to pay in cash. That is number one. Number two is that you must pay interest for the delay of 1 month because you are paying liability after 1 month delay. That means instead of March, that means April 20th, you may be paying in May 20th. So thereby you have to pay interest. So these are the 2 points which you can have to keep in mind. But the answer to the issue is framed here is that you can use your future ITC for payment of past liabilities, provided you declare in that particular month where you availed the ITC. So with this, the discussion on the self-assessment is completed. Now I'm going to the second type of assessment. See, if we, now till now what you have seen is self-assessment. That means this is assessment made by the taxpayer. Now it is a if you see this various types of assessment, first self-assessment is a assessment by taxpayer. Other assessments like provisional assessment, scrutiny assessment, or non-filers, or unregistered persons, or summary assessment. All these assessments are made by the department. So thereby, except self-assessment, whatever other types of assessment will be done by the revenue department. So in various specific scenarios. So now I am going to discuss about the provisional assessment. So what is provisional assessment? Provisional assessment, if you see the back before getting into GST provision, I'll just give a 1 minute background of provisional assessment. Provisional assessment is nothing but a assessment on a provisional basis. That means it is not a where you are doing on a provisional basis. Wherever you must aware what is provisional and what is final. So with this, I'm we'll see what is the GST law says. So section 60 of CGST Act provides for the provisional assessment. That means it deals with the provisional assessment. It says taxable person. That means there is a difference between registered person and taxable person. What is registered person is whoever actually registered is a registered person. Taxable person means not only registered person who is liable to be registered also can be a taxable person. That means not only registered, even unregistered persons also can ask for a provisional assessment. You may ask, why should unregistered person will come and ask for a provisional assessment? So you know there I'll give a background or I'll give an example where unregistered persons also may have to some cases may require for a provisional assessment. Let's say you are in a there is if you are have a client or persons in the dairy industry, there is a dispute or let's say instead of getting into that example, let's say there is a dispute that your taxpayer is assuming that my product is exempted, so I am not liable for registration, whereas department is taking an interpretation that no, it is not exempted, it is liable at a 5% GST. Now the the if going by taxpayer understanding, you are not liable for GST. Thereby once I am not liable for GST, if my entire supplies are exempted from GST, I am also not liable for registration. Thereby I would have not taken registration. If department is saying no, you must department, there is a interpretation from the department that no, it is liable at 5%. So the taxpayer don't want to take any dispute in future. What he felt is, instead of I'm waiting for future show cause notice or future assessment from the department, I'll only proactively go and take a decision. Here they have two options. One is that they can go for advance ruling and can a ruling get a ruling whether it is exempted or 5%. You may be aware, seeing the various plethora of the advance ruling which are always revenue favor. So there is also alternative options available. Instead of you going for advanced ruling, you can also come to a provisional assessment. That means whenever you have a doubt about your applicable rate of tax, you can come to a provisional assessment. So that means even not only registered person, even unregistered person also can come and apply for the provisional assessment. Here, if you see, sorry, yeah, if you see the section 16, it says taxable person unable to determine value or rate. So if you are a taxable person and you are not able to determine a value or rate, that means provisional assessment is limited to the questions involving wherever you are not able to determine value or you are not able to determine rate, then only provisional assessment is available. That means it is not available to all cases. It is only available wherever you are not able to ascertain the value or you are not able to determine the rate. So the example what I've given for rate, that you are assuming that it is exempted, but there is also a second another school of thought is that it is a 5%. So in that case, you are not able to determine. Of course, you can take a stand, but you are not able to determine. So then you can come for a provisional assessment. And also then as far as valuation also, if you see related persons or wherever you are making the sales without consideration, the valuation rules provides that you should apply for an open market value. Then what is open market value also defined, but unfortunately it is not every case open market value is available. Your product may be unique or considering the various differences and characteristics of the product, or the comparative product may not be having a comparable value. So like this, there are various scenarios where you may not be able to identify the value or not determine the value or rate. So in all these cases, you have an option. You have option of coming for a provisional assessment, asking for a correct rate. So this section says wherever you're not able to determine value or rate, that means the questions for provisional assessment is only value or rate, not for other cases. You have to apply for in GST ASMT 01, and you have to request a proper officer in writing. That means the once you file online the request, that is in writing only, for a paying tax on provisional basis. That means you are asking a permission that I'm going to assess the tax on provisional basis. Please me allow. That means provisional basis is that in my example, I take an example instead of exempted of 5%, because once you are exempted is not liability. So take another example. You are assuming that your product is liable at, or you are understanding you are of understanding that your product is liable at 12%, but department says it is 18%. Or there is another school of thought is that it is 80%. Then what you can do is you can go to a department and say, uh, my, these are the circumstances in which I am not able to determine whether it's liable at 12% or 18%. Please allow me to pay at 12% and balance 6%. If you are finally judged, I'm going to pay balance amount in future. That is how we have to make an application. What department person is going to do is he has to give a permission in ASMT04 and say within 90 days from your application, he has to give a permission to pay on provisional basis. That means he will give permission to pay make on provisional basis. And you must remember the provisional assessment is not every time is preferable. I'll tell you the reasons in a little later. So once he gives permission on provisional, what proper officer has to do is he has to finally assess the rate and valuation, and he has to give the final value, final liability. That means in the provisional assessment, you would have told you pay 12 at 12%, but after detailed verification of the product, detailed verification of the various factors, it was held that it is 18%. That means there is a short payment of 6%. In that case, what you have to do is he has to the proper officer is going to give a final assessment order in ASMT 07. Then after that, ASMT 07 has come. So whatever the differential liability, that means you would have already something you would have paid on provisional basis, right? So that amount and the final assessment, whatever the balance amount is there, you have to pay to the government along with interest. Let's say whatever provisional assessment is paid is more than what is actually liable because of final assessment order. In that case, what you have to do is the balance, that whatever the difference amount is there, that will be refunded along with interest at 6%. This is the brief of the provisional assessment. I'll tell you in what cases provisional assessment is preferable, or generally people will prefer to go for a provisional assessment. So provisional assessment is preferable wherever there is a price variation clause in the agreement. So this is very regular in case of government contract. So what happens is whenever there is a price variation clause in the PSUs or various scenarios, there would be price variations. Let's say there is whenever there is a diesel cost is increased, there is a price variation clause that if diesel price today's market at the time of quoting a tender, my I am quoting this tender price considering that my average price of diesel will be 80 rupees. Let's say after at the time of execution of the work, or at the time of execution of the project, the diesel price has has jumped to 100 rupees. That means there is a 20 rupees variation in the diesel price. The basis what I have taken tender price is different, and the actual price at the time of execution of the project is different. So like this, covering various scenarios, many PS contracts with the PSUs, big projects with the PSUs, they'll have a clause in the agreement saying that there would be a price variation clause considering the BOQ rates. So, but practically many times what happens, this price variation clauses will not be finalized easily. That means if I have to make a supply goods to you today, I may have to determine the rate because of then what supplier would have done, you would have asked the PSU, consider this is the cost increment increase in the last 1 year, so you have to increase my price. The PSU, unlike you may be knowing that how government is going to react, so they'll not react immediately. At the same time, they'll demand the goods to be clear or sent immediately. That means they won't prefer to resolve this dispute immediately, but at the same time they don't want to compromise on the supply. But means they'll expect supplier to supply the goods, but at the same time they may not be able to finalize the price. So like this. And also there is another possibility of there may be contract price disputes. So I would have told my site engineer or government engineer had certified that you have done work of this much, and this is what you are eligible for the invoice. However, I would have told no, I did this much work. That means I would have told I did this much of quantity, but my engineer says no, you did only this. There is a difference. There is a dispute on the actual work execution. That means contract price there is a dispute. Like this, various reasons will be there. Wherever there is a you are not able to identify the or determine the value, provisional assessment will be preferable. However, you must note wherever provisional assessment is, you want to provisional assessment, the practice is that, or the experience of the past pre-GST law is that government, like how advance rulings are in favor of the department, the provisional assessment orders also in favor of the department. They would be giving with the maximum liability. They will not be giving it the minimum liability. That means you always end up paying a higher liability in case of provisional assessment. If you are ready for that, you can go for a provisional assessment. Then, so next question comes is whether, one second. The next question that comes is whether provisional assessment is, let's say there is provisional assessment is always at the option of the taxpayer. That means taxpayer has the option to opt for a provisional assessment. It is not that you have to go for wherever you are not able to determine. It is your option of the taxpayer. Number one. Number two is that I opted for provisional assessment and I requested my proper officer to make a provisional assessment. In this case, the question that comes is whether proper officer, that means whether assistant commissioner, deputy commissioner who has designated as a proper officer for the purpose of provisional assessment, whether they have a right to reject your request. That means, if to put it otherwise, whether department officer can reject your request and say that I want to provisional assessment, you follow your regular proceedings. Whether he can say, or he has to mandatorily pass a provisional assessment. Practically, as I was seeing, whenever you go for a provisional assessment, you end up paying a maximum liability under provisional assessment order. Thereby, rarely they will reject your application for provisional assessment. But even going by the GST provisions, they can't reject your application by by less or highest liability. They have to pass an order. That means they have to honor your request. They don't have a right to reject your request for provisional assessment. Then next question comes is ITC, whether ITC can be paid for the provisional assessed tax. So this is in the background. If you see section 41, which provides for a ITC, it says whatever you are availed in your return, that will be given as a provisional basis, and that subsection 2 says that provisional ITC whatever you approved, that will be utilized only for self-assessed liability. So now going by the section 41 subsection 2, one may get a doubt. It says only, that means ITC I'm only eligible for payment of self-assessed liability. I may not able to pay liability assessed under other than self-assessment. That means various types of assessment, like which you are going to see, like best judgment assessment, etc., or this provisional assessment. You may get a doubt, but the section 41 subsection 2 is not relevant to for ITC utilization. What is relevant for ITC utilization is section 49 subsection 4, where it says whatever ITC credited to the electronic credit ledger, you can utilize for payment of output tax under this act. That means they are not restricted to any self-assessed liability. Then you may ask a question, then what is the relevance of section 41 subsection 2? It says section 41 subsection 2 is only relevant only in the context of provisional ITC. That means there is a concept of matching which you are aware. I can take ITC on my own, but it has to be matched with my supplier return. Then only it will be finally given as ITC. So that means till the matching is over, it is a provisional ITC. It is not a final. However, till October 2019, that matching was kept in abeyance. Thereby, that matching is not at all required. Thereby, whatever I take in GST 3B, that is a final ITC. I need not go for a matching. That is the for the time being, it can be said that whatever I take in GST 3B till October 2019, that is a final. That is not a provision. That is a final because matching provision itself was deferred. Anyway, after October 2019, in light of that disputed or controversial rule 36, it is only allows on the matching principles. Thereby, whatever I take in GSR 3B, which is eligible as per the other provisions, is a final rate, final ITC. Thereby, I can use for any tax, including the provisional assessment tax as well. Then I applied for provisional assessment, and the officer, informed me that you can clear like this. You can apply 18% and pay GST. So should I follow any different procedure for disclosure of invoice in my GSR one and also payment of taxes in returns? Is to answer this, there is no specific procedure to make your complaint. The procedure is same. What you have to do is you have to only regular procedure of filing GSR1 and filing GSR3B is same. There is no different procedure. Only there is no additional requirement of as far as filing returns and also disclosure of in returns. It is there is no specific field in the GSR1 and 3B also. Then if you see that provisional assessment section, it says provisional assessment order has to be given within 90 days from the request, and within 6 months from that provisional assessment it has to be finalized. Either provisional assessment order was not given within 90 days or 6 months, within 6 months that final assessment was not given. So what is the impact then? So let's say he has passed provisional assessment order within 90 days, saying that you are liable at 18%, and there are 6 months time limit to make to finalize that provisional assessment. That means if today I have to apply, let's say today only that provisional assessment order has come. So from today, within 6 months, the provisional assessment has to be finalized by the officer. So take an example, he has finalized and he has given whatever the final assessment. In that case, fine, okay. So that is done. What if that final assessment was not done within that 6 months? To answer this, one point which I have not told in the initial beginning, previous slide, is that the officer can have can extend that 6 months to a maximum of 4 years. However, he has to take approval of commissioner. So forget about that extension for a moment. Assume that extension was also not taken. What will happen if the provisional assessment order is not finalized? So what would be the impact? So in that case, can we say that whatever the provisional itself is deemed to be final? If you go by the section wording, it is not clear whenever that time limits are not met, whether the provisional assessment will be final or not. It is not clear. But going by the principles, whenever there is something was not done in a prescribed time limit, it is assumed to be that he has accepted the previous proceeding. Thereby, you can say whatever the provisional assessment would be deemed to be final, and that would be the final assessment order for the purpose of this section. Then this is also more connected to the previous question, where how I have to disclose returns and all that. Here also, as far as the provisional assessment, let's say I get a provisional assessment saying that it is liable at 18%, you pay GST. I raised a invoice to my customer and I paid 80% GST and filed GSR1. After final assessment, the office themselves, very rarely happens, of course, he says, no, it is not 80%, it is 12%. That means there is a 6% reduction. Then how I have to reduce this? How, because I have paid excess now, how I have to reduce? So here, as far as adjustments on account of provisional and final assessment is more or less same. What you do for a credit note and debit note adjustment, what you have to do is you have to raise a credit note to the extent of 6%, and he has to reverse it, and the 6% balance amount is there. That excess payment will be given as a refund. Let's say take a reverse example. He has provisional assessment is says 12% and final assessment is 18%. That means 6% you have to pay extra. So that also you can collect from your taxpayer for your recipient by giving a debit note. However, there will be interest from the date of invoice. So that is one. To cut short, the conclusion would be, as per the provisional assessment, whatever the short paid or excess paid, you have to pay along with interest, and you can collect it from your buyer, and you can give a debit note or credit note as the case may be. And there is no a different procedure prescribed for the purpose of invoices and documentation or returns while complying with the provisional assessment order. Then what will happen? Whatever the provisional assessment order done by my department, I am not agreeing. Let's say take an example of the exempted goods. he says you are liable at 5%. I am saying it is exempted. So if you are not agreeing, you have a remedy. What will be the remedy? So you have a remedy of filing an appeal before appellate authority. You can go for an appeal. So you have that remedy. That means you must file an appeal. You should not keep quiet. Otherwise, that will be a binding on you. You must comply with the provisional assessment order. With this, I have completed presentation on the provisional assessment. Now I am moving to the next type of assessment, that is returns scrutiny. So this is a return scrutiny assessment. This is basically, if you see, self-assessment and provisional assessment is a assessment was not at all done. So that is they are initiating the assessment. Whereas this scrutiny assessment is that something is already assessed, I'm only verifying it. So this is the scrutiny assessment. That means something was done by the taxpayer in self-assessment. That means your file is written under self-assessment. The department is verifying or scrutinizing that return. That is what the scrutiny assessment means. So section 61 deals with that return scrutiny. It says proper officers scrutinizes returns are related particulars to the particulars. That means he will scrutinize your return as well as related particulars. Why he will scrutinize, why he will verify is that to verify the correctness of your return. That means whether you have filed return correctly or not. Then once he scrutinizes, after the scrutinize, if he is finding any if he is not finding any disturbances, then fine. So nothing will be there. If he finds any disturbances, what he will do is he will inform the disturbances in form ASMT 10, and that disturbances he'll inform to the taxpayer in form ASMT 10, and he'll ask the taxpayer to give explanation in ASMT 11 within 30 days from the informing of the disturbances. That means he'll give 30 days time to reply to you. You can inform, you can reply to the proper officer, and you can explain why the disturbances are there and what is the impact. If your whatever the explanation you given to him, if he feels it is satisfactory and the discrepancies are are not resulting into any short payment or excess payment, any etc., then he can close it and he can close this scrutiny, and there will not be any further action. Let's say he feels it is not satisfactory. That means you are not satisfactorily given an explanation. You know what is satisfactory in 30 days. Then what he will do is he will here he can't do anything. That means it is not that whatever the discrepancy will become automatic. What he has to do is he has to invoke a appropriate action. That means appropriate action means various actions like issue of show cause notice, or doing a audit and all. That is what it says. That means as far as this return scrutiny assessment is concerned, it is only a stage of verifying your returns and finding out your discrepancies in that return, and informing you. If explanations are not satisfactory, he has to initiate a other appropriate action. He can't recover directly. That means it is not a assessment of tax dues. It is only assessment of discrepancies. Once he feels that discrepancies are not properly explained, then he has to initiate action. Various action he can initiate. One is that he can order for a audit under section 65. 66 is a special audit. 67 is a inspection of the premises. Or you can also give a show cause notice under section 73 or 74, which we have dealt in first section of the today. So that means to repeat again, the scrutiny assessment done under section 61 is only to verify the particulars of return, and if any apparent or any discrepancies are there in return, that will be communicated, brought to the notice of the taxpayer, and they will seek a clarification. If the clarifications are found satisfactory, proceedings will be closed. If clarifications or explanations are not found satisfactory, they will start the other proceedings. They are not going to recover tax directly. So here, as far as the return scrutiny, the central tax opponent of central tax will be the proper officer. Or if you are falling under central jurisdiction, if you are falling under state jurisdiction, different states have given a different designation. Some states have given a CTO, assistant CTO, or deputy CTO. It depends on your state. If you are falling under that state, there will be designated a proper officer. So now if you see the section 61, there is no time limit for initiating of the scrutiny returns. That means the returns can be scrutinized. Returns can be scrutinized immediately after you file return or after filing after 2 years or 1 year or whatever the year. So there is no definitive timelines for the scrutiny of returns. Even so, there is no definitive timeline. However, we have to remember that the return scrutiny is only a procedure to verify your record. That means they are only verifying your returns. That means there is no though there is no time limit. The appropriate action to initiate appropriate action under 73, 74, or 65, there is a time limit. That means in my in a previous slide I just explained 61 only gives a power to verify or scrutinize your return. They don't give any power to arrive at the liability. They don't give impose any liability. It is only all are verification stage and taking the explanation. So more of it is only scrutinizing. So thereby, though there is no specific deadlines in section 61 of the CGST Act, because it is linked with the appropriate actions under other sections, like say Shokan notice under 73 or 74, there are timelines in that section. 73 there is 3 years time limit, and 74 there is a 5 years. Thereby, that timelines are going to cover this kind of scrutiny also. Let's say after 2 years the officer has come, or else let's say for almost 4 years from you filing a return, he has come and is asking for a, I wanted to scrutinize your return, give me the return. So he can scrutinize it. There is no harm in, because there is no as such, there is no timelines. But the appropriate action of demanding tax from you, he must go to 73 or 74. What 74 and 73 says, he has to initiate action within 3 years or 5 years. If he has not given show cause notice or passed an order within the 3 years or 5 years, though you would have verified the or scrutinized the return and you would have found discrepancies, once he has failed to give show cause notice under 73 or 74 within the timelines or pass adjudication under 73 or 74, the discrepancies still may be there, but he can't recover tax under that particular section. That means this scrutiny is only a subset of action under 73 or 74. It is not a standalone action. I say. Next, thereby the time limits whatever applicable to that action will be applicable. Then can the scrutiny be made based on the, so this is another popular thing happening particularly with the state officers. What is happening is what they are doing, whatever the 2-year report they are taking, and they are saying as per 2A this is ITC available, whereas you are taking the TB this much, there is a vast difference. You reverse the ITC, you pay back ITC. So whether they can do so, because you see the section 61, it says returns, they can scrutinize the returns filed by you. That means GST 2A is not return filed by you. It is not a return at all. So whether they can scrutinize that particular 2A or not. So if, in my view, they can't scrutinize GST 2A and say that you are not eligible for the ITC. So whatever the assessment done based on the GSTR 2A report is not a valid assessment under section 61. You can challenge that assessments. In fact, there was already a challenge made in Andhra Pradesh High Court where they were challenged and said, however, there is no final assessment, final decision from the High Court. But as of now, there is interim direction that the DSH 2A report cannot be a basis for the return scrutiny. This is number one. And there is some if you are a taxpayer in Telangana, you must be aware that what they are doing is particularly small taxpayer and composition taxpayer. What state government of Telangana has done that they have taken a POS sales. That means if you are a trader of you are a furniture trader, and what they have done is they have taken a POS sales statement from your bank current account, and they have compared your turnover with the GST return. Wherever there is a shortfall, they have said there is a shortfall, and they have given a scrutiny assessment under section 61, and they said there is a shortfall of turnover. You declare less turnover, you pay GST on it. Even that assessment also may not be valid because they are not scrutinizing the fields of GST return. You can challenge that as well. However, at the same time, government their officer has power under section 73 and 74 to say that I have evidence of saying that your turnover is 10 crores, but you are declared only 4 crores. That means they can initiate proceedings under 73 or 74, but not under section 61. Again, another issue that may come up is in future, not maybe today. So what happens? They share audit. The department is doing the audit, has done the audit today, and has verified the audit records. And after your department audit is over, there may also you may be getting a scrutiny notice from the same department. However, why this practically happens is if you see central tax, there are different commissionerate for conducting of audit and conducting of written scrutiny. So people who are conducting written scrutiny are different. People who are conducting audit are different. Or sometimes the same office may be there, but officer would have transferred. You would have not aware that it was already department has completed the audit. In that case, whether they can initiate a written scrutiny or not. If you see department audit is a comprehensive audit which covers all documents and verify the cross check and all that. So because it is a comprehensive audit, you can say this already the fields are verified by your own department, your own office. So this written scrutiny will be not be required. So there are cases where based on this explanation, particularly in this was there in service tax and central excise also, when we have given this explanation, department has also accepted and they have not scrutinized it because it's already verified by the same officer and there everything was found in order or whatever the discrepancies they already noticed and they have given it demand notices. So all these cases you can say whenever there is a already department audit is over, you can say scrutiny is not required because return scrutiny is also part of department audit. Yeah. Now we'll go to the next type of assessment, that means non-filers assessment. So non-filers assessment is that so you are a registered taxable person and but you are failed to furnish return. That means you are not filing return under section 39 or 45. So 39 is the monthly return or that your regular return of monthly or quarterly return. 45 is your final return whenever you are making final return. So then what they have to do is they have to do going by section 62 is that first they have to give a show cause notice or they have to give a notice in GST or CA under section 46. They have to say it's as per the records you are not filing returns, you file your returns and they have to give a 15 days time to file return. So 15 days time if you are not file return, then what they do is they can go for a best judgment assessment. That means if you are not file returns, they don't know what your transactions are there. So in that case they can go for a best judgment assessment proceedings and they can judge your liability on their own basis and they can pass an assessment order in form ASMT 13. So as far as the time limit to pass an order is that it is 5 years from the due date of annual return. That means this, and also remember this is overriding the section 73 and 74. That means they need not go into the suppression and all that, etc., etc. They need not establish whether you are suppressed or not, irrespective of whether you did a fraud or not. Once you are not file a return, they have a period of 5 years to at any point of time and to come and say that you are not file returns and I'm going to demand or I'm going to pass a best judgment assessment order in form ASMD 13. So they can do that whenever they have done like this. So the what we the taxpayer has to do is either he has to file a return or he has to pay that and also pay liability. That means if best judgment order was passed, so then what we have to do is we have to within 30 days we have to make the tax liability, pay the tax liability and file a return. Then the whatever the final assessment order passed under best judgment assessment order will be deemed to have been withdrawn. Thereby, that assessment order will be nullified. That means once you, because the entire assessment has started because you are not filed return. Once you file return, that will be nullified. However, there is a time limit of definite to time limit of 30 days to nullify that best judgment. That means once a best judgment assessment order is passed under section 62 or 63, which is coming section, you have to file a return within 30 days and pay tax along with interest. Then the assessment order deemed to have been introduced. Then let's say if you are not paid, you are not paid tax, then what will happen is that if you are not paid tax, they can recover it. However, you may ask, sir, the entire problem of many times what happens, I would have not filed return because I don't have money to pay. If they are, that is the problem where I have stopped filing return. If that is the case, if they are making a budget assessment order and they're trying to recover, what should I do? In that case, what you have to do is you must go for a appeal and say that this best judgment assessment order is not correct. This is section 63. The another section relating to the assessment. This is also best judgment assessment only. Only thing is that in what cases they can do best judgment is that in case of unregistered taxpayers. That means you are not registered for GST, but you are liable for registration. In that case, what department can do is they can make a best judgment assessment under this section 63, because once you are unregistered, you may not be filing your returns, thereby you don't have any data, and they can best make a best judgment assessment order under this section. For this, forms is ASMT 14 is the form, and they'll give a opportunity of personal hearing, and then they'll make a assessment order in ASMT 15. Here also the time limit is 5 years. They can make an assessment whenever within 5 years, whenever they want from the annual return due date. However, in the common issues for the 62 and 63 is that department can make a best judgment assessment. This concept of best judgment assessment is not a new for GST or new concept under GST law. It is a old concept of there in the already there in the income tax and also sales tax, to some extent in central excise also. So best judgment assessment is already there in the income tax and sales tax. Whatever the principles there in that various principles which are laid down in income tax and sales tax are also applicable for GST also. So what are the principles? How this applicable is that there are various principles which are given in my slides. Is that it is not a wild assessment. It is not, best judgment is not a wild. That means it is not that they can put whatever they want. It is if they knowing that you are not file return, they can't take their own figure and they can put a return. Let's say in the last 1 year, you did a turnover of 20 crores. While making best judgment assessment order of next month, what they can do is they can't take a 20 crores as a 100 crores and make a best judgment. They should not take a fancy number and put it. They have to go with some rationally relevant material and logics. That means they have to go some rationality. That means, okay, last year you have done 20 crores. Before that, last year you have done 18 crores. Yeah, and before that you've done 16 crores. That means there is a sharp increase of 10 to 15% growth in your turnover. This time I'll take 25% as a increment growth. Thereby they can take, that is the rationality. And relevant material. What is relevant material? So relevant material may be, let's say you are a supplier of goods. So you know that every supplier of any supplier, what you do, you have to raise a EOA bill whenever you are moving goods. So of course, small consignment is not there. So if you go by EOA bill anyway, you can file it. However, there is a restriction that once you stop filing return for 2 months, you can't generate a EOA bill. Let's say that is not there for a moment. So you are raising a EOA bills, and the EOA bill data gives you how much quantity you have sold and how much value is there. That is also relevant material. And there is a logic which I told you, the growth rate. Like this, various material has to be considered, and also relevant material maybe industry or your own case also. Like this, various material has to be considered while making a best judgment assessment under GST also. However, as far as law is concerned, GST law has not prescribed any definitive principles of how best judgment assessment has to be done. But these are the principles which are evolved from the income tax and sales tax, which are applicable for GST also. Here, there is a recent decision which was appeared by me only. Is Home Sai Professional Detective. It is a there also what happened. They are as they are not able to they are not filed the returns within the deadlines, and department started initiating. They have asked for the return under section 46 and saying that you file return. They are not filed, so they did a they have proceeded to make a best judgment assessment under section 62, and they have taken a 150% of the growth. That means I have in the last financial year I have done a 10 crores turnover. In the next financial year, what department has done this? Last year turnover is 10 crores. No, this year I'll take it as 15 crores. That means they have taken a 150% growth. That means 15. They have taken 50% growth, which is may not be there in any major many industries. 50% growth is not a easy in any industry. That is within a span of 1 year. If that is the case, they would have not uh, kept become non-compliant. So that is the logic what you explain. You look at various principles of best judgment assessment under income tax and sales tax. They are not passed. They are not done the best judgment assessment based on the various principles laid down in income tax. The appellate authority also agreed with that submission, and he said yes, that assessment done by the department is not correct, and he has set aside that, and he has said that he has sent back the matter for requantification of the demand. And in fact, that case they have filed GSR 1 and they have only not filed the GSR 3. In that case, the officer told GSR 1 is there, which is a very relevant material to arrive the liability. Why you have gone to a different basis? Then various issues that may come. As I was saying, these are overriding section 73 and 74. That means it is independent of 73 and 74, and the timelines, whatever 3 years or 5 years under 73 or 74 is not applicable here. The procedure also not applicable. What you have to do is within 5 years, whenever they are you have not filed returns or you are unlisted for GST but liable for GST, in that case they can come and initiate your assessment. Then if you see 62 and 63, it only talks about they can assess your tax liability. They are never talking about penalty. Of course, interest is anyway automatic. Once you say tax is liable, interest is automatic. You need not assess it. Even 75 also says that. But what about the penalty? Penalty should be imposed by other. No? So 62 and 63 are silent on the liability of penalty. Whether assessment proceedings they can impose penalty or not, this is there. However, if you see 62 and 63 is very silent, and they are not saying that assessment officer can impose penalty. However, by inherent nature of the GST law, they can impose penalty under section 122, and they can ask for a penalty. Then, yeah, there is sometimes what happens in a hurry to make a best judgment assessment. Sometimes department will forget to give a show cause notice under in form GSR 3A. That means I told you, no, institute to initiate a best judgment assessment order for non-filers. First, they have to give a notice and ask for you to file a return. If you are not filed within 50 days of their notice, then only they can go for a best judgment assessment order. It may be possible that you would have not, they would have not given notice in 3A at all. In that case, you can challenge this proceedings and saying that institute, they have not filed, they have not followed the requirements of 62. Thereby, the best judgment assessment order is invalid. In fact, that is one of the ground which we have taken home side. They have not given a notice in form 3A to give an opportunity to file return. They have proceed to file a assessment under best judgment. So that proceedings are invalid because institute clearly says even after filing, even after giving show cause notice or notice under in form KSR CA, then only go for a best judgment assessment. That means you can say that without giving notice in form 3A, they make a best judgment assessment. The best judgment assessment is invalid. Then next issue is that what happens is that there is a, if you see that section 62 says if you file once best judgment assessment order is passed within 30 days, if you file return, that order deemed to have been withdrawn. Still, there was a case where he has filed return, but not within 30 days. He has filed on 31st day. Then they want to, officer said, Harry, please, withdraw this and all that. Then the officer did not accept, and they have gone to High Court. The High Court also said, yeah, look at section 62. 62 language is very clear. You have to file return within 30 days. If you have not filed return within 30 days, you are not eligible for that deemed withdrawal. Then what they have to do? They have to go for appeal, and they say, this is what happened, and I already filed it. So please set aside the demand. Most likely that appellate authority will be setting aside the demands in by judgment assessment order. And what happens? It says there is sometimes what happens in 30 days. I would have paid tax, but I have not paid interest under section 50. So whether it will be a deemed withdrawal. That means within 30 days I have filed return. I paid tax and I filed return. It is unlike tax. I need not pay interest in the same return. I can pay at any time. So, but I did not pay interest. Whether that deemed withdrawal will applicable or not. If you see that section 62 language, it says you should furnish a valid return. It says valid return. So that means valid return is only says that you have to pay tax in full. Then that means should I pay interest also? If you go by section 62, it says along with interest you have to pay. That means if you are not paid interest, it may not be a deemed withdrawal. You have to pay interest also. Then as far as unregistered, question may comes. First of all, I am unregistered for the GST. How they are going to make assessment? How they are going to give me a show cause notice and order? What they do is they will give a temporary ID and they say, no, this is how we have to log in and see your forms. Not only this, there is another interesting point for or important point for unregistered assessment is that whenever unregistered assessments are happened, the main what is the first point is that they have to establish that you are liable for GST, but you are not registered. Then only they can come for section 63. Then the question comes is first they have to prove that I am liable for registration. No, they have to prove that. No, they should not say that it is not one way of deciding that you are liable. They have to establish that you are liable for registration. So then once that is establishing that you are liable for registration, then only they have to proceed for assessment under section 63. That means, take an example, I am into a education services. I am I am of understand that my education services are exempt from GST. So thereby, if once I am into exclusive exempted services or exempted supplies, I am not liable for registration. So I did not ask for a registration, though. So I kept quiet. But department has come and said, no, you are liable for registration. You have to pay GST. Then first they have to say why I am liable for registration. So that means they have to initiate. They already have to prove that I am liable for registration. So for this, there is already a defined procedure under registration provisions where they have to give a notice and within 30 days or 15 days, they have to give me an opportunity of being heard. Then if they finally pass an order and if let's say they pass an order saying that I am liable for registration, in that case, I can go for appeal against the same order where it says you are liable for registration. Not only before assessment, they have to conclude that registration proceedings. So if let's say if I file an appeal against the order saying that you are liable for registration, till that appeal order is decided, they can't make assessment under section 63. That means today they come and they says you are liable for registration, you pay GST. Then I says no, I'm not liable for registration. Then they have to give notice to explain why I'm liable for registration. Then they'll pass an order. That order I go for appeal and saying that no, I'm not liable for registration, but they're saying liable for registration. When that is finally decided, till that is decided, then till that time they can't initiate proceedings under 63. Then next type of assessment is summary assessment. Summary assessment is the section itself, heading itself gives an indication. It is a summary assessment. It is not a detailed assessment. Like it is they say it is a fast track assessment. So it is like it say the section 64 says wherever proper officer has evidence to say that tax liability comes is a less pay, then they with permission of their higher other officer like ADC and the joint commissioner, then they'll give a they'll proceed and they'll assess a tax liability, and they have to give a order in ASMT 16. So it is, if you look at section, it is direct order. They won't give any so-called notice, any opportunity being heard and all that. It simply says, as per my information, as per my knowledge, this is our tax liability, but you have not paid. Please pay it. So this means this is a fast track assessment. So then what they have to do is, if the assessment order is passed in ASMT 16, what taxable person, what you have to do is, you have to make an application to that proper officer and saying that, no, I am not accepting this, is not correct and all that. If that is accepted, that is erroneous and all that, that will be deemed to be withdrawn. That means that will be withdrawn and the proceedings under 73 or 74 can be initiated. Then these are the issues in section 64. As far as the designated officer for this summary assessment, for central tax is assistant commissioner or deputy commissioner. As I was saying, summary assessment is a kind of fast track assessment, and you may get a doubt: is it period specific or transaction specific? It can be either of it. It can be a particular consignment specific, or it can be a particular period specific. And what about the time limit? As far as the time limit, if you see section 64, there is no time limit. But what all they can do is, whenever there is a assessment under this section, you must ensure that you apply, make an application within 30 days. Otherwise, it will be binding on you. Otherwise, you may have to go for an appeal within 3 months. Let's say you applied for within 30 days, but you are not, that officer has not withdrawn the order. What you have to do is, in that case also you have to go for an appeal. So, and what will happen if I am not applied within 30 days? The impact would be, you may have to pay liability unless you file an appeal within 3 months. With this, I have completed my talk on assessment and various types of assessment, and it is each how these different provisions are there. Now I'll move on to the audits. If you see, this is the audit definition. Says audit means examination of the records, returns, other documents maintained or by the registered person under this act, rules made thereunder, under any other law for the timing in force, that to verify the correctness. So this is first part. What all they can examine? They can examine your records, they can examine your returns, they can examine any documents under this act. So whatever as a registered person you are maintaining or supposed to maintain, they can examine and they can, okay, they'll examine. What will happen after their examination? What will happen is, after their examination, they'll examine with the view to verify the correctness of turnover declared, taxes paid, refund claim, etc. So they'll be verifying with an objective to verify the correctness. If you see, these are the various types of audit under GST. One is audit by chartered accountant or cost accountant. This is a very this is nothing but a audit under section 35, which is nothing but section GSR 9 audit, 9C audit. So this is audit is a which you have to do it on your own. That means you have to appoint your auditor, and your auditor has to conduct the audit, and he has to file a audit report along with the reconciliation statement in form GSR 9C along with annual return. That many of you would have already seen and filed annual return and also annual audit report in GSR 9C. So this topic I am not taking it now, because there is already a separate section on the 9 and 9C. So that speaker is going to discuss everything in and about the GSR 9C. So then there is two other audits, which two scenarios of audit is nothing but a department audit. There are two types here again, two subsets here. One is that department will come and do audit. Second is department will appoint chartered accountant or cost accountant to conduct an audit. So there are two kinds of audit which will be done by department. Now first we'll see department audit, then we'll go to the special audit by the chartered accountant. So department audit is nothing but your jurisdictional commissioner or their subordinate officer. What they do is they'll verify your records and they'll check your complaints, whether you have properly filed your returns, whether you have declared total liability, turnovers, applied correct rate of tax, valuation, everything in and everything about GST they can verify. And for this, what they are the procedure what they have to follow is that they have to give a audit intimation, audit shock, audit notice that I am going to come and do audit of your record in form ADC 01. For that, they have to give at least 15 days prior notice. That means if they are doing audit from first, if they want, if they are coming and doing audit of first May, from first May, they have to give a 15 days prior notice. That means before 15th of April, they have to give a notice that from first May we are going to come and do audit of your accounts. Please keep your records ready. Then the not only the commencement, they have also they have to complete within 3 months from the commencement. So that means they have to complete their audit within 3 months. However, the 3 months can be extended to another 3 months. Then after completion of audit, what officer are supposed to do is they have to inform the findings and whatever the liabilities they have to inform to the taxpayer, and they also have to take a reply. After taking the reply, what they're supposed to do is first they have to give initial objections to the taxpayer and take a reply of the taxpayer, and then if the reply is satisfactory, then they'll close that para and they says okay, this is law. If that is not satisfactory, which will happen many times, they'll give a final audit report in audit ADT 02 form. So once this is done, then what it is not that immediately it is liability is on you. It is not a assessment. It is only audit. So what will happen is it will be followed by a demand show cause notice under 73 or 74 if you are not agreed and paid to the audit report findings. These are the various issues which can be there in department audit. The first and foremost thing is whether revenue department has a power to do an audit. So this is coming from a background of service tax, because there was various high court decisions holding that department cannot do a audit. However, all the high court judgments are based on finding that the service tax rules is only talking about the audit. Service tax statute, that means Finance Act 1994, has not given any powers to do audit by the department. That in that ratio, that means the section is not providing any department audit, but only rules are providing. In that means section rules are overriding section. In that background, they have struck down that and said that revenue department can't do audit, but they never said that revenue department is not all eligible for the audit. That means they are not decided on the competency of the department to do audit. They only decided that the Finance Act provisions are not enabled to do audit by the department. But in GST that was taken care. In the GST statute itself, that means CGST Act and the GST Act itself is mentioned that department office will come and do audit. That means that aspect was overruled now. Next thing is C&AG audit. So what will happen is, today department will come and do audit. After 3 months, and they'll give a final audit report saying that, sir, your records are very clean. You don't have any liability. But surprisingly, after 1 year or 2 months, 2 years, you get a call saying that, sir, whatever you have done audit earlier, there in that particular period, you give that agreement, you give that invoices, like that you will get. So you may get, so sir, already audit is over, sir. Why you are asking again now? And you yourself has given a final audit. Then they may say, no, my audit is over, but C&AG audit is going on. So to people who are not aware about this C&AG is a audit of audit authority of the government revenue. That means wherever government revenue is impacted, they have a power to do an audit, and they'll be doing audit of GST department also. So what ideally in the past, what CNAG people used to do is they used to directly come to the taxpayer offices and they used to ask for give that records and all that. Then there was challenge. How come CNAG will come to a private party? That means which is not a public enterprise. How come they come to a private parties and do the private party records? Then even there was a contrary judgments of high court, various high courts. One high court said they can do. One high court they said they can't do it. However, all these high court decisions are only saying that they can't go to a taxpayer office and they can't do audit of the taxpayer records. but they can do a audit of records of government. That's the reason nowadays what C&AG people are doing, they are not coming to taxpayer office. They are only taking records from the department audit officer, and any department records which are not there in the department files, they are getting it from taxpayer. So they stopped coming to taxpayer offices, which they should not do as per this. Then yeah, other issues like central and state, and these are all jurisdiction issues. Is that it is like this? All in every state as well as entire central government has given a detailed notification which are the what are the jurisdiction of each tax circle or range or division. So that particular division, that particular circle officer only will be doing the audit of that particular taxpayer, and they have jurisdiction to conduct on it. They can't go there beyond jurisdiction and do an audit. That means if you are in a Hyderabad, there is already a division office, a particular region of the Hyderabad, and they can do audit of that particular division only. They can't go beyond their division. However, board can appoint and say particular records of particular assessee will be verified by so officer, that they have that exception power. But as a matter of routine, each taxpayer records are no our jurisdiction is divided among the center and state. Within center and state also there are various circles and various jurisdiction officers who will verify within their jurisdiction only. They won't go beyond they should not go beyond their jurisdiction of their particular range or circle or division. Then the question that comes is, what will happen if they are 3 months they are supposed to complete the audit? What will happen to if they have not completed within 3 months? You can say, they are as per the law they are supposed to conduct complete audit in 3 months, but they are not completed. So what else will happen is they will not come. They'll stop coming to our office, but they can still give a audit report and initiate a uh, proceedings under 73 and 74. Now, at the same time, just because they have not completed the audit and within 3 months, it does not become the evidence or the objections or discrepancies noticed in the audit will not become invalid. They can still initiate a legal action under 73 or 74 by giving a show cause notice. They can give a show cause notice if time permits under 73 or 74. That means the proceedings may come to an end, but the evidence collected or discrepancies noticed, they can still may have to go and uh, go through the procedure of 73 and 74. Then ITC adjustment, I think whatever whatever the additional liability which is identified in audit, whether you can pay ITC, as I was mentioning for self-assessment related, even for the past liabilities also, the future current ITC can be used. Only thing is that you have to pay along with interest, and also that past liability has to be declared now. And yeah, other small issues. Then this last part of the audit is that special audit. This special audit is, as the name itself says, it is a special audit. If you see that Assistant Commissioner, prior approval of Commissioner, what he will do is, in case of scrutiny, inquiry, investigation, or any other proceedings has already been initiated. That means it is not a standalone proceeding. Something is already going on. As a part of it, the officers felt that he can do a special audit, can get a special audit from the chartered accountant or cost accountant. So what he has to do is, that officer can appoint a chartered accountant, cost accountant, and particular issue or particular area he can give it to the chartered accountant and say that you verify and give a report to department. That means there is some related party transactions with because of various complexity relating to the valuation and the provisions. So what office can do is, there are various related party clearances of this company. They have some 10 related companies, and whether they are correctly assessed for GST or not is, it has to be examined in detail. What the office can do is, you will ask the appoint the chartered accountant or cost accountant. I'll say, you examine related party transaction and give me a report whether GST was paid properly. If any short payment is there, you let me know. If any short valuation like this, you will give it a specific requirement, and you'll appoint a chartered accountant or cost accountant. Cost accountant, chartered accountant has to submit report within 90 days. However, that 90 days can be further extended to another 90 days. If there is no discrepancies, no further action. If the discrepancies are there, what he has to do is that discrepancies will be informed to taxpayer. Taxpayer informs these are the reasons why there is a short payment, or this is what the reason is. If that found satisfactory, the proceedings will be over. If that not satisfactory, they'll proceed to give a show cause notice under 73 or 74. As mentioning, special audit is a presuppose some other proceedings under other proceedings. It is not a standalone proceedings. And also note that you can't say, "Arey, already one chartered accountant has done and he has filed reconciliation statement in GST 9C. So again, chartered accountant is not required to do an audit." You can't say that, because special audit is for a specific and special requirement, and the section 66 itself says it is notwithstanding the fact that it is already audited under GST. This can be done. And whatever the expenses of special audit, like fees paid to the chartered accountant or cost accountant, or travel expenses or various expenses, will be for chartered accountant, cost account will be paid by the commissioner or tax payer, and that will be reimbursed by the department from taxpayer only. The chartered accountant is responsible, will only get amount from the department, not from the taxpayer. So with this, I completed my presentation on this assessment and audit. So now I'm open for the question and answers from the participants.
Yes, sir. So, due to brevity of time, I will summarize most of the queries so that it will be easy for you to answer it in a speed manner, fast manner. So, the first query, sir.
Yeah.
If I have, am I audible?
Yeah. Go on.
So, I have not filed my monthly returns. The department can issue a notice under section 46, and there is also a standard operating procedure prescribed by them, where they have said GSTR 3A has to be issued within 15 days. Yes, I need to file the return. And even if we are not filing return within 15 days, they will issue best judgment assessment order within 30 days. In all these proceedings, they have not included the fact to follow the principle of natural justice. Like they need to give an opportunity of being heard to me. That is not being given here. So will that can be questioned?
Yeah, see, the opportunity of being heard is already an opportunity. That notice of saying that you file your return within 15 days is an opportunity given to you. There you have to avail your opportunity and file your return and showing the declare your turnover. So that is a sufficient opportunity under section 62 or 62, sorry. So that is sufficient, and whatever there will not be any extra opportunity will be given under 62, because it is only in fact even after best judgment assessment order also, it is not that there is already facility within 30 days you file your return, that best judgment is deemed to be withdrawn.
Okay, sir.
That means there are two opportunities. That means before assessment, after assessment also opportunity is there. And you also remember the returns what you are going to file after best judgment need not always be tally with your best judgment assessment order. Let's say take an example. Their best judgment has done for 150% of turnover, but it is actually 120. So that is not match. But as long as you file your return, that will be deemed to be withdrawn. So there is opportunity in both the ways.
Okay, sir. Hope it is being answered in detail. Moving on to next query, sir. Sir, in your deliberation, you have said that there is no restriction of using the future credit for paying past liability if such past liability is disclosed in the same return in which I have availed the ITC. So, in many of the other sessions, the experts were saying that this principle has to be taken from general statutory provision, like past liability cannot be set off against the future credits. So are you taking this stand because of Rule 86 sub Rule 2, where it says electronic credit ledger can be debited against any liability? Are you taking stand based on that rule, or is there any other grounds for such stand?
Yeah. There is not only Rule 86 sub Rule 2, even Section 49 subsection 4 also says whatever output tax is there, whatever output tax in the return, that you can utilize. So once ITC stands credited to credit ledger, then you can utilize for your output tax liability. There is no restriction, express restriction coming for utilization. As long as you are paying along with interest, you are making it as a past liability only. So it is not only based on Rule 89, Rule 86 is also read with the rule Section 49. Yeah.
Okay, sir. The next query, sir, in relation to provisional assessment, if I opt for provisional assessment and I am paying tax based on provisional assessment, is there any specific procedure for disclosing it in monthly returns, or I can disclose it as a normal liability in 3B and 1?
Yeah. As I mentioned in my presentation, there is no specific or additional requirement once you opt for a provisional assessment. How you are, it is regular disclosure. There is no specific or additional requirement for the purpose of returns or invoices.
Okay, sir. The next query, it is in relation to scrutiny of returns. So under section 61, the officer has power to scrutinize the return and the related particulars furnished by the registered person. However, in practical, department is issuing notice because there is a difference between 2A versus 3B. However, 2A is not any data furnished by the registered person. Can we oppose based on that ground the notice received?
Yeah. In fact, I did mention in my presentation, you can oppose that and say this assessment cannot be done in section 61.
Okay.
However, what will happen is they'll proceed and give a show cause notice under 73.
73.
Yeah.
Okay, sir. The next query. GST credit availed during the financial year and the entire credit has been reversed under Rule 42.
Okay.
Without interest. So, since I have not paid interest, can they issue show cause notice only for recovering such interest?
If you go by 73 wordings, because you already whatever the liability which is wrongly availed tax, wrongly availed ITC was being reversed. You can one can say that they can't give a show cause notice for mere interest, but once the one must note that whenever it is interest is automatic. When you accepted that, this is ITC is wrongly availed, then you must interest will automatically liable. They need not give a show cause notice. However, there is a recent High Court, Jharkhand High Court decision where it is said that this kind of scenarios they can give a show cause notice. What they have to give a show cause notice is that they have to say 100 rupees is the wrongly availed ITC which you have reversed. So I'm appropriating it. So I'm proposed to appropriate. And why should I demand? Why should not I demand on interest on that wrongly availed tax during that intervention period of availment and reversal time? They can give a show cause notice going by the Jharkhand High Court decision.
Okay, sir. I think that's all the questions raised by the participant. Just a minute, they have raised one more. I'm seeing your.
Okay.
Mr. Vignesh, kindly raise your queries here. I have not received your mails. If you want to answer it, kindly raise in the appropriate tab so that we can answer it now. The next query. Yes, sir. The next query by Mr. Janarthanan. can we ask for the copies of documentary evidences taken by the departmental officials during their assessment audit?
Yeah, you can take a call.
Yeah, they can take the call. Sir, one more thing.
It is not a
As
seizure or a detention. These are yeah. Go ahead,
yes, sir.
Arjun.
Then, no, I'm going for next query. So if you want to give some more additions there, you can give.
No, I'm only saying that because audit is only a verification of record, you can
Okay.
always take a copy and give him. It's not a seizure where
Okay.
they're going to seize your record and go.
Okay.
Yeah, go ahead.
The next query, sir.
Hmm.
In case of delay in issuance of audit report, that means after audit, they have given that within 30 days from the completion of audit, they need to issue the report or
Yeah,
notice. What happens if there is a
Hmm.
delay? What stand we can take? What
See,
should be our proceedings?
yeah. So as I mentioned in my presentation,
Yeah.
what all you can say is that proceedings may not be valid, but the
Okay.
fact remains is that there were the decisions in the past also. Whenever any
Mm-hmm.
proceedings are said to be invalid or illegal, the proceeding still
Mm-hmm.
remains invalid. But the point is that whatever the evidence collected during that illegal proceedings still to be can be a basis to raise a demand or to make assessment under 73 or 74. That means they can still proceed with the so-called notice under 73 or 74, though the proceedings may
Okay.
be said to be invalid.
Okay.
So practically that doesn't give much result to you.
Mm-hmm. Okay, sir. So I think
Except
you
you
have answered all
know,
the query. Yes, sir.
go ahead, ma.
Yeah, I think you have answered all the queries raised in the tab. So any other unanswered queries which the participants raised through mails, I will follow up with you through mail, sir. So we can send the reply through
Sure,
offline.
sure, Arjun,
Yes,
sure,
sir.
sure.
So by this, we are coming to the end of the session in relation to assessments, audits, and common issues for dealing with such kind of audits. I like to thank personally and also on behalf of Hiranga Academy to the speaker CA Venkataprasad sir for appropriating your time for providing such valuable insights and additions to the participants. Thank you so much, sir, for your wonderful session and your value addition. And also, I thank all the participants of the session for patient listening and raising queries. Hope all your queries been clarified. If anything unanswered or if you miss to raise in the present tab, you can always mail it to us. We will be escalating and following the speaker and will get you the answers. One more thing, you should also remember queries should be related to the session topic and it should be general query. If it is any specific query relating to your clients or in your business, we will take it up offline apart from the certification course. Thank you, sir. Thank you all.
Yeah. Thank you, Arjun. Thanks for Hiranga Academy to give me for giving a chance, and thanks to each participant for sparing your valuable time and listening to my talk.
Yeah.
Thank you.
Yes, sir. Thank you, sir.